before the next calendar year. But do you think today's figures sort of, change anything on that front?
I do think so. I mean, the Reserve Bank of India's growth forecast was looking optimistic to everybody at 7.2. I think it will not be reached in FY25. The second half will have to accelerate very much, which is unlikely for that forecast to be realized. So I think that the Reserve Bank of India would also be downgrading their growth forecast to something what possibly is their assessment of India's potential growth. Now, coming to inflation, of course, we have an inflation print which was 6% plus, and possibly November would also be an elevated print. But let's be mindful that it is largely because of some vegetable prices that is happening. Now, if growth is undershooting considerably and is showing signs of a cyclical weakness which is sharper than expected, I think the Reserve Bank of India will have to rebalance their outlook and rebalance their commentary and possibly even policy actions. So maybe in the coming days, you would see a more divided market, which was hitherto more or less on the side that the RBI does not need to cut rates at its December meeting, but I think there would be a divided market view now.
All right. So coming back to you, Radhika, I do want to understand, while we did see across several high-frequency indicators some easing in momentum, we do agree that today's print is a bit of a shocker. It is even lower than was being estimated. What do you think the nature of the current slowdown of sorts is? In terms of industrial GVA, the understanding was that also because of the fact that we had benefited from a higher base effect, this print was not entirely sort of a surprise. We were expecting industrial GVA to moderate. But do you think that the current sort of slowdown is more cyclical in nature, or is there sort of reason to be more concerned?
So coming to your question on the particular segments, I think mining was expected to slow down. Industrial activity was expected to slow down. Some of the high frequency numbers were showing us that. If you had seen even the manufacturing sector, corporate performance, revenue growth had slowed down. Again, sectoral things like refineries, cement, for example, were not showing not so robust numbers. Mining, because of weather, like was already pointed out. And so you've seen, I think the numbers are telling us that it's a bit more broad-based. Now, when you look forward, which could do better, I would think, again, construction, which had slowed down, we think that could pick up. Agriculture is another one where you have seen the Kharif production behind us. Hopefully, the farmers will be able to get their Kharif-related incomes, and then the Rabi crop is going to start soon. So that cycle will also likely, at least in the Jan to March quarter, provide a bit of support. But the takeaway, I would think, is also that it's more the slowdown is much more broad-based. Services have done relatively better than industrial activity. But even then, if you look at some of the subsegments, there's been a bit of a moderation in momentum. So looking at whether your question on cyclical or structural, I think this is certainly a pace of normalization. We have come from 3 years worth of around 8% average growth for the past 3 years. And we are heading towards a phase where it's a bit more normalization in trend growth. That's why we had expected a sub 7% growth this year. And I think some of these numbers actually validate that as well. But I don't think this essentially shows that, the slowdown is here to stay, in the sense that this is a structural slowdown. There are several, reforms that have been undertaken, efforts that have been taken, which will basically be positive for productivity as well. But it's unlikely to show. I mean, these don't show in the growth numbers very fast, so it does take a bit of time. And I think there are some like I earlier said, in the consumption part of the story, we haven't really spoken about much, but that part of the story also needs to be able to withstand in the coming quarters. You've actually seen the wage, say, for example, salaries and wage growth in the listed companies, that growth rate has weakened. And if you've seen the agriculture wages as well, we had seen the real wage growth actually be flattish in the latest quarter. I would think the consumption part will be very important to watch. There's a bit of handover expected from urban to rural. That really a lot of counterparties are hoping and that would play out. Like I said, Kharif incomes working their way, and then hopefully that will be followed by better returns on the Rabi as well. And there's some government support as well being extended. So in all, I would still see this as a trend of moderation and normalization after coming from very strong growth. But I think there needs to be policy action undertaken from fiscal as well as the monetary side to take support growth going forward.
All right, thanks a lot for that roundup, and thank you so much, Radhika and Dheeraj, for taking time out to speak to us. We will be in touch shortly to, as you have time to look through these figures. Also, thank you for pointing out in terms of expenditure-wise trends. In case of private final consumption, we're looking at growth of about 6% on an annual basis. In terms of government final consumption expenditure, we're at about 4.5%. And in terms of capex, we're at about 5.5%. Now, I'm also joined by Neeraj Shah for his quick thoughts on what the markets are going to be making of today's figures. So, Neeraj, it's been sort of a mixed bag in terms of the earnings season in Q2. And we have seen some slowing in momentum across a host of high-frequency indicators. Added to that, today's GDP figures aren't particularly reassuring either. What are you making of all of these, and how do you expect the markets to react to these?
Yeah, so Pallavi, good afternoon. And is this a disappointment? Yes, it is. Was this baked in? Some bit of this was. Is it fully baked in? You could answer, or you could argue that maybe not. But I think the market had come to terms with the fact that Q2 was a disappointment, which are showing in the corporate results. Will the market react very negatively or adversely to this in a sustained fashion on Monday? I doubt. Remember, between now and Monday morning, we'll have the auto sales data coming out, some other data coming out from companies which will release their monthly numbers as well. And if those numbers look okay, then the market will look at the October and November combined and then think of maybe that the coming out of this Q2 number, which has been a debacle, has been swift, and therefore it may not look all that bad. So in isolation on this number, should the markets have gone down if it had not until now? Yes, absolutely. But because the markets have already corrected from 26,200 to 24,000 circa 24,100, and because some of the high frequency indicators have come out okay, I would suspect that the markets will not take too badly to this. One last point I want to make, the corporate commentary in the recent past, especially in the last 3 or 4 days, of at least companies who have spoken to us or have spoken to brokerages, has been pretty positive. So in some sense, there is a semblance of sanity opposed to this, what you could argue a rather insane number on the Q2 GDP, Pallavi.
All right. Thanks a lot for that, Neeraj. We clearly have a whole host of indicators to look forward to. Like Neeraj mentioned, in terms of corporate commentary, at least going by that, it does get a tad better, especially on the back of expectations of a recovery in urban consumption, alongside some signs of recovery that we're already seeing on the rural front. That apart, we're also going to be looking at some sort of a boost from the festive economy as well as the wedding season. A whole host of other indicators that we're going to be watching out for closely. We will continue to unpack some of these figures and make more sense of them going forward, but that's all we have on this edition of Profit 360. But do stay tuned to NDTV Profit on our continuing coverage of today's figures and a lot more in terms of news and updates.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
How much money do you need to have to be considered wealthy? Back before I was born, and even in the early 2000s, in fact the year 2000, being a crorepati was considered the benchmark. It was something that India aspired to. And that's why Kaun Banega Crorepati, which was launched in 2000, was such a big hit, and why it captured the imagination of the populace. Now, 1 crore may not be what it once was, but it is still a major landmark and a major milestone in the journey to building wealth. It is also a significant bottleneck though. But even if it sounds daunting now, once you have pushed through that bottleneck, the journey beyond is so much easier. I'm Alex Matthew, and on this episode of MoneyWise, I like to talk to you about what it takes to build that 1 crore and how you should reach that quickly, but without taking undue risk. Join me today is Shalini Sekhri, the Chief Growth Officer at Renaissance Investment Managers. Thank you so much, Shalini, for taking the time as always.
Thanks, as always. Great to be here, Alex.
So let's talk about that magical number, 1 crore, crorepati. It's etched indelibly in the minds of so many people, and it's something that they aspire to. Why is it so magical?
So, Alex, I'd like to start by saying that the 1 crore number is so much more than just a financial milestone. It, in fact, is almost like a gateway to a world of possibilities. So think of that first journey to 1 crore as opening a door. And once you step through it, the path to even greater wealth becomes far more accessible. So why 1 crore? It's not a number that's been plucked for thin air, right? So the relevance of 1 crore is that for so many of us, maybe the salaried class, maybe this large middle income India, 1 crore represents a number that can, in a very meaningful way, change your life. It could mean securing your financial future. It could mean not just living, but living well currently. And it could mean achieving all of your dreams. So that's why it's a really meaningful number. Now, it's not something that you just put down on a piece of paper and say that, here it is and my job is done. It requires a lot of work to be able to be extremely thoughtful about what is your lifestyle, what is it that you want to aspire, and what is the life that you want to live. And once you know that, to be able to align these financial goals with your life's aspirations makes it a far more meaningful journey. Rest assured, it's going to be a tough journey. And to be able to have the motivation of what lies at the end of this can prove to keep you, on the path even when the going gets tough.
So let's talk about the journey to that 1 crore mark, because a lot of people, now that they are accessing content like this and they are speaking about building wealth much earlier, they have access to so much more in the way of avenues to build growth, investments, that they're starting earlier than a lot of us did. So from that perspective, how do you go about starting this process of building 1 crore?
Like you said, Alex, it's quite a daunting thought when you're starting out as a youngster, maybe 23, 24 years old. You're making maybe at best 1 lakh a month as salary. That's a big number, right? So I'm saying let's assume that's where you're starting out after your first few years of internship. It seems like a long ways off, but there are certain basic principles you have to start with, I think, which will put you on this path and make it far less daunting. So I would start by saying start early. I cannot emphasize that enough. Time is truly your ally as you're building, your financial wealth. So that's number one. The second thing is to have very clear goals, because this in a way becomes your guiding star, your north pole towards which everything you do should move towards. Thirdly, live below your means. And I would say not within, but below. And once you have these savings, invest wisely. Lastly, try and create multiple streams of income. So for example, your investments themselves become income besides your regular salary, right? So these are the basic principles. There are few things you need to think of in terms of financial discipline.
Yes.
You mentioned some of them. So obviously you need to budget. It cannot be, a Bhagwan Bharose number. What am I going to save? You need to know what your post-tax income is and budget from that. You need to know how your savings are going to come about. Thirdly, you need to plan for your loan repayments, which are generally quite a large part. If you have taken a car loan.
Are there rules that govern this?
Yes. So we'll come to how to really split, your post-tax income. Then, of course, you also have to plan for your taxes, because today, when you're compliant, you do have to give some money back to the government. And lastly, you should also plan for an emergency fund. So all of these financial guidelines kind of, take you towards this. There is a broad thumb rule of budgeting. To keep it very simple, I would call it the 50-30-20 rule. It differs. I mean, some people would be able to save much more. Some people are struggling to make ends meet. But what the 50-30-20 rule says is that 50% of your income would go towards necessities, which would include your rent or EMI, depends whether you're in a rented accommodation or not. 30% could be for
your
wants.
Lifestyle expenses.
Right, so needs are your basics which you have to take care of. 30% are wants. You have to live a little, you're only young once. It's so important to also enjoy the journey. So we're not talking about a very frugal lifestyle. You must enjoy your money as well. And the last 20% should be kept for savings. So I would say this is a lot of tweaks possible, but this is a good simple rule, because firstly, you don't need a complicated Excel sheet to execute this. You don't need any financial advisor to execute this. You can, compute this yourself.
And that's the bare minimum that you can do. You can, of course, do more.
Yes. So many people can save a lot more. Many people would find even this number daunting. Maybe as their salary increases over time, they may be able to get there. Perhaps today it's not possible. But as they say, it's never too late to start. So perhaps at the initial years of your career, it may be a stretch, but as you move ahead, do this. I also know a lot of people who work backwards. They're so motivated to their end goals that they decide how much they want to save. They subtract that from their income, and what's left is all they allow themselves to spend.
Wow.
So that's a highly disciplined, committed way to your future goal. So it's all about the motivation, what it is that you're trying to achieve, and how you stay on the course.
So you mentioned 1 lakh, but I know a lot of people that are sub 25 that are much, much lower than that. So we're talking about 5, 6, 7 lakhs even. People are starting with that. Of course, they do grow into that 10 lakh, 12 lakh bracket, but it takes a good 5-7 years for them to get to that point, which is not to say that they can't start, right? So are there any calculations that you've made that may, lay out this journey that they can take up for them to reach this 1 crore mark?
So Alex, I'll start by saying that there are 3 main parameters around which, this journey to 1 crore wealth creation begins, right? So one is, how many years do you have to accumulate this wealth? Whether you're starting at 25 or 45 makes a great difference,
right,
to this outcome. Secondly, how much are you able to save? So whether you invest 20,000 a month or 50,000 a month, for example, would also make a great difference to the final outcome.
Yeah.
And lastly, what is the return on your portfolio? So whether you're starting with a initial saving of 5,000, whatever that number might be, maybe try and use the 50-30-20 rule. So if your salary is not 1 lakh a month, it's 50,000, you can still apply the rule and you would still have, say, a 10,000 rupee SIP to start with. So somewhere I think that journey must be begun. And if one is disciplined and carve aside that saving right at the start of the month, rather than it being a byproduct, okay, now the month is over, what do I have left? I think you can start on the journey irrespective of what your salary is. So that's what I genuinely believe. And eventually, as you tweak each of these metrics, you will see how the journey becomes quicker and quicker. So I'll take an example. Say I'm investing 20,000 rupees a month as an SIP. I do nothing with it. It's lying in a bank locker under my mattress. It'll take me a whopping 42 years to get to 1 crore, well past retirement age.
Right.
If I were to tweak one parameter, that okay, it's not lying under my mattress, I'm earning, say, 12% return through a simple mutual fund SIP.
Which is reasonable.
Which is very reasonable. Equity has given 14% return in the last 20 years. I find that number from 42 years comes down to a very doable 16 years. If I tweak the third parameter, how much am I investing? Say 20,000 goes to 50,000 a month. That 16 years comes down to 10 years.
And it's not incremented. It's 50,000 straight over.
So I'm not even talking about stepping up your investment. Now, coming back to your point, suppose initially my salary was much lower. I was starting with much less. There is a concept of, say, a step-up SIP.
Yes.
Right? Which basically says that if you invest 20,000 and stick with 20,000 for, say, 16 years, you'll get to 1 crore at 12%. Even if you increase that slightly, let's say you're doing well, you start getting, a jump, a promotion, an incentive, increment, and you take that up by, say, 10% every year. So you start with 20,000, you take it up by about 10%. You'll find that 16-year journey has come down to a 13.2 year or something like that, which means that all the money that you're getting by way of, say, an increment should not just go into increasing your lifestyle, equally should be, channeled towards increasing your SIP. So even these small tweaks, no matter what salary you're starting with, will eventually get you there. Slightly slower or slightly quicker, but if you're able to stay these courses, use these very, very simple guidelines, you will certainly get there.
But it's still a considerable amount of time, Shalini. We're talking about 13 years, even if you've started at 20,000 rupees and you've incremented it by 10% per year. And we're assuming 12%. Of course, we've gotten more than that in the past, but there's nothing to assume that we will get that in the future. So it's going to be a considerable amount of time. Now, having said that, I want to understand why it is so important to hit that mark and how quickly things can escalate going forward.
Sure. So this is what we call the magic of compounding, Alex. We all know about it in theory, but I'm very keen to explain it through, again, another very simple rule. I'm all about rules today. So we call this the 8-4-3 rule. So one is, of course, start early. Just to take our example, even at 25, if you started this journey, even with 16 years of getting to 1 crore, you're still only 41 years old. So it seems like a considerable time, but at the end of the day, you still have almost perhaps 20 years of a earning life ahead of you, and you've already hit the 1 crore mark. Now, coming to the power of compounding, what the 8-4-3 rule says is that once you start investing, say, at 12% return, let's keep the same example, it takes about 8 years to double your money.
Sure.
The same amount which has taken you 8 years to create, it'll take you only 4 more years to create the same amount.
With the amount that you've accumulated.
Which you've already accumulated. Right. And the further doubling happens in only 3 more years.
Right.
Right? So basically, again, coming back to our 1 crore example, say I do a 21,000 rupee SIP every month. At the end of 8 years, this amount will be about 33 lakhs. It'll only take me 4 more years to do the next 33 lakhs and another 3 years to do the next 33 lakhs.
Right.
So by the time I'm 15, 16 years through the journey, I have accumulated this 1 crore.
1 crore.
Let's assume now I take early retirement. I don't want to slog it out anymore. Even if I do nothing to further add to this corpus, 1 crore in 6 odd years becomes 2 crores.
Yeah. Rule of 72.
Yes. And if I don't do anything and don't touch it, in another 5 years, it would have doubled to 4 crores. So same example, start at 25, by 51, I'm now sitting on 4 crores. So the power of compounding says not only am I earning on my initial capital, I'm also earning on the return. And as the amount gets more and more scalable, you'll find that it becomes a snowball effect. So the first 8 years is slowish growth, but steady. The next 4 years, it accelerates. And by the final 3 years, you have the snowball effect. So I think that is really the power of compounding and starting early. I think everyone can think about retiring at 41 in case they follow this rule. Just think about it, 4 crores, even if it gives you a 10% return, you have a 40 lakh income every year.
Absolutely. Yeah. And the beauty is that if there are periods of significant outperformance that can give you a leg up as well. Sure. Like we've seen over the last 5 years, we've seen a tremendous journey in the equity markets, which has resulted in wealth creation for a lot of people. Now, it goes without saying, therefore, Shalini, that if you get a leg up, if, for example, like my dad, he wished that I would do a certain educational course, and I decided I'm the black sheep of the family, so I decided not to. And 5 years back, he said, look, I wish that you would have done this, but since you didn't, I'm just giving you the money, you do what you want with it. And thankfully, I decided to invest it. Now, if you do get a leg up, it's a significant benefit if you use it right.
Sure,
right?
You could receive an inheritance, you could receive a large bonus in a good year, some of your shares did well, you cashed out, you could be a business person, you've had a particularly good year. So there are a lot of these instances where, you're able to add significantly to your kitty, and then you have even more time and even more money on which to compound. So somewhere I think the strategies and the habits that you inculcate in this journey become second nature, Alex. And money gets money. So once you've pushed through that first 1 crore benchmark, as you talked about, it might seem a little daunting at first, but once you step through that door, so to speak, you just kind of take off and you just accelerate to even greater wealth. So I think that is the magic of this 1 crore number.
So the thing is that when people look to achieve this mark, it is so, it's so beguiling, it's so aspirational, it's so interesting to have, and you dream about this moment, you want to reach there faster. And so unfortunately, people tend to take on too much risk. How do you go about identifying how much is okay? Because a lot of people tell you that investing in small caps is great for you if you are early on. In your example, if you were 25, and if you're talking about building wealth over 15, 16 years, you don't need to touch that now. So you could potentially have tremendous growth, but some people take on too much risk. So how do you justify that?
So one is the principle of asset allocation is also really important. So if you think of the main broad categories, say equity, debt, real estate, and gold, right? It's so important to have a balanced portfolio, to have some of those assets in your portfolio, no matter what stage of life you're at. A lot of these asset classes have a very low correlation to each other, which means no matter what the market cycle is, some pocket of your investments will perform. And this is important because, there are certain market cycles where, say, for long periods of time, equity may not do well. Yeah. And perhaps it's the real estate part of your portfolio, or, maybe the gold. Gold has been such a surprising asset class. You never thought about it seriously, but, it's been doing great things. So
25% so far this year, approximately.
Amazing, right? Otherwise, you just think inflation beat or just helping us keep up with inflation. So all these asset classes have very different cycles and very often not correlated to each other. So that's very important for a portfolio construction. Now, at different life stages, obviously, of our life, our ability to take on risk changes drastically, right? Affected by a few things. What is our income? Is it stable income, or are you like a gig worker or, a freelancer? Secondly, what are my expenses? Thirdly, what are my responsibilities? When you're young and single, it's just all about you. Then you get married, you have kids, their education, older parents. So that as well determines how you're able to invest. The other thing is age. And lastly, I would say market dynamics, because at all points of time, markets throw you curveballs. So, you do need to readjust. So the broad thumb rule for asset allocation, which is where really risk gets mitigated, is, again, a rule of 100 is a very standard thought, which says that 100 minus your age is how much you should have in riskier assets.
Okay.
So, for example, in equity, you could have various types of equity, say direct equity, you could have, that is, you're buying stocks, right. You could have equity mutual funds, private equity, international equity. Then you have the whole debt bucket, which would range all the way from, say, FDs to PPF to debt mutual funds, InvITs, REITs, the range is immense. You have real estate, again, through a fund, or you buy a physical apartment or a shop on rent, you give out on rent, or a piece of land. And lastly, gold, which you might buy an ETF or a coin or, jewelry for your wife. All of this.
Husband.
Or husband, yes. So all of this can go potentially into a portfolio. So as you can see, individuals have a very wide spectrum through which they can construct a portfolio. The riskier assets would perhaps give you somewhere from 12 to 15%. Your fixed income can give you anywhere from 5 to 10%. And accordingly, real estate, gold would also be, in that 8 to 10% range. So it's not just equity, for example, which is the path. Like you rightly said, if I was 25 years old, the rule of 100 says that I can have 75% in risk assets and 25% in safer stuff. And that reverses. By the time I'm 75, I would have, only 25 in riskier assets.
But
and
the pool is much larger.
By then you have a lot more money. So, say on 4 crores, you're getting, forget 12%, which we're expecting from equity, even a blended return of, say, about 9 to 10%, you still have a, good quality of life and, enough money coming in. So taking on undue risk, I think, is a problem. In fact, as we were discussing, Alex, to our mind, what we learned conventionally in school and college, that higher the risk, higher the return, we think of it as a straight line.
Yeah.
It really isn't, because after a point, there is an undue amount of risk that creeps into a portfolio, either by taking only small cap funds, because that's in favor of micro cap funds, or you buy really risky stocks. Now, what could happen is it all does well for short periods of time. But since we're here for the long game, at some point when markets turn, you can see a significant loss of capital.
The bottom falls out.
The bottom falls out. You cannot catch it however good you are. So which means not only have you lost return, you've also lost your principal. So to our mind, risk return is more like a bell curve when you're investing, which means that the path to high returns is not very high risk, it's moderate risk. Because that very high risk comes back to bite you in ways and at times that you least expect it, eroding even your capital.
So it's not a, it's
not a linear,
it's not a linear progression.
Trending.
There is a reversion to the mean.
There is. And once your capital starts to erode, then all the good work you've done over the years gets undone and can set you back by many years, and then time is not on your side, so you can't always catch up. So it's very important to have the long game in mind, like I keep saying. Think about not 1 year, 2 years, what's happening now. Don't watch the news as much. Don't get carried away by what other people are doing.
Don't say that.
But, jokes apart, I think it's very important to stay disciplined and not get carried away that this is what everyone's doing. This is what's sounding really cool, easy money. How many direct equity investors do you talk to who will tell you about only their success stories? And rest assured, having met many of them in my career, I would say for every success, there would be at least 2 stocks that they've lost tremendous amounts of money on, which they're not really talking about.
And so it balances out.
So eventually, it's like 1 step forward and 2 steps back. And when you're trying to create a long-term wealth journey, that can be pretty counterproductive. So just consuming risk in the hope that it plays out, again, I would say can be extremely counterproductive to this 1 crore journey for sure.
A significant milestone, of course, is that 1 crore mark.
Yes, absolutely.
Thank you so much for joining in and for speaking to us on MoneyWise. And, well, here's my wish to you. I hope that you accumulate this 1 crore very quickly and you have the option of sipping coconut juice or kawa in the hills, whatever you like, earlier than maybe some other people in years gone by have achieved to do. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
When the whole day passes like a blur, the news just whizzes past, and you are trying to stay informed. It is our job to bring you news that truly matter. Got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vajrajani, and we will take you through the next 1 hour of trade. All of this week, we've been doing something slightly different from what you've been used to on Ask Profit, and we've opened up the phone lines. In fact, that number that you see on the bottom of your screen, that is where you can call. And Mahima and I would love to speak to you and get your questions answered. To that end, we've got fundamental and technical expert on the program. Let me introduce you to them. We've got Gaurang Shah, who's the head of investment strategy at Geojit Financial Services, and Kushal Gandhi, who's technical analyst Stocksbox. Thank you so much, gentlemen, for taking the time, and I will come to you in just a short while. Let me very quickly take our viewers through where the markets are right now. And you have gains of about 0.25% to 0.33% for the Nifty 50, but it's been a very tight range. I would like to point out that around this time yesterday, you had a very similar story play out. And then over the course of this show, you saw a breakdown of that, and you saw cuts, very substantial cuts at that towards the end of the session, and that was highlighted by the foreign institutional investors selling at the end of the day, the third highest single day selling in this year, and that's saying something, over 11,000 crore on a net basis. Of course, there was considerable buying by domestic institutions as well, about 8,000 odd crore bought on a net basis. But let's take a look at the market breadth. It is more or less even Stevens at this juncture, and this is visible in the broader markets as well. You have the mid-cap index that's trading just about flat right now, and you have the small-cap index that's trading with a marginal negative bias, as I saw. Oh, actually it's turned positive. So there you go. It's actually quite a bit of chop and churn. From the point where I started this program to right now, it is actually trading positive as we speak. So let me go across to Gaurang for the first question, and it has to do with, do we have a caller, by the way? Okay, this is on WhatsApp. Haresh Thakkar is asking, and he's writing in from Mumbai, he's asking about Z Entertainment, Gaurang, and we see the stock reaction in trade today. The stock is up 5% or thereabouts on account of this development that you saw last evening, where the shareholders have voted to disallow the continuation of the directorship for Mr. Puneet Goenka. How do you rate the latest development, and what should he do if he's bought at levels of 145?
Well, thank you, Alex, and morning to all of you all. So I think this stock has been more of a news-based driven stock rather than the fundamentals. And we all know the recent history with respect to the merger. Not going into all those because now that's been put to rest. I think this flip-flop as far as, the role of Mr. Puneet Goenka has been in the spotlight for the last about a fortnight or so, correct me if I'm wrong. And the stock has reacted accordingly. And as a disclosure, we do have coverage on Z Entertainment. And I think like everybody, we are also eagerly expecting for more clarity to come through and getting the company back on the growth trajectory. Because these news flows will possibly drive the stock depending upon which way the news flow is coming, either positive or negative, Alex. And more importantly, let me say this, I think investing in Z Entertainment would require a lot of patience and a long-term time horizon if the company has to bring back its past glory. As of now, we would recommend a hold for all those who have gotten at lower level. But let me say this, like I mentioned, it's going to be a patience game and a long-drawn investment.
It's a hold and a patient game and a long-drawn game is the view coming in for Z Entertainment. We have our first caller for the day, who's Govind Raj from Chennai. Govind, hi and good morning and welcome to NDTV Profit. I believe your question is on Bank of Baroda.
Yeah. Hi, Alex and everyone. Good morning. So I have an investment of 40,000 quantity in Bank of Baroda. And I've been holding it for past 5+ years, and I would like to know, will it ever cross 300 by 2025 April? And what is the fair value of this stock?
All right, what's the price at which you bought this stock?
79.80.
All right, so that's a very interesting
quantity first of all, and you've been holding it with a lot of patience. I'll go to my funder guest and ask him what's his view on Bank of Baroda. Gaurang, I'll come to you for this one. He's sitting on Govind is sitting on a significant amount of profit, and he wants to know whether it will cross the 300 mark, and whether and he also wants to know the fair value for Bank of Baroda. So your view on this particular counter.
Well, thank you. And I hope that Mr. Govindraj has other investments, because 40,000 quantity of Bank of Baroda. And if this is the large part of his holding, then I think on the fundamental side, let me give a piece of advice to Mr. Govindraj that don't have an overexposure on any particular sector or a stock, because that increases your risk on investing thesis and principles. So having said that, as a disclosure, we do have coverage on Bank of Baroda, and I think the second quarter earnings which the bank delivered was in some areas above what our estimates were. And the target that Mr. Govindraj has spoken about, closer to 300, well, that's exactly where our target is on the long-term point of view. 79 rupees investment, 40,000 quantity. Like I mentioned, don't overexpose yourself. But our sense on the entire banking space, both public as well as private, is that in the years to come by, I think credit demand is going to go up significantly. And that will enable a very decent loan book growth. We have gross and net NPA, especially from the public sector banks, being reported at low end, which results into write-backs of provisioning. The only short to medium term concern is, garnering liquidity via deposit, because that has been a slow for all public as well as private banks. But I think that should possibly ease out as we go forward from here on.
Okay, Gaurang, Govind, if you're still with us, I just want to clarify the question that Gaurang had, which is quite a valid question. Kushal, just hang with me. Sorry, I'm keeping you waiting. I will come to you in just a short while. But Govind, I'm just curious. As a part of your overarching portfolio, is this a very significant chunk?
That's my only holding, and that's my portfolio.
Oh, yeah. Okay. So then this is a very important point that Gaurang has raised from the perspective of concentration risk. You understand, of course, this is a public sector utility, but still you need to have a diversified holding in the stock perspective as well. So maybe take this opportunity to look at some of the other stocks that we look at over the course of this show, just to give you a sense of what you should invest in. All right, let's take the next question. Thanks so much, Govind, for calling, and hope this helped. Lakshmi Organics is the name of the counter we're taking, and I'm coming to you on this one, Kushal. 429 is a buy price. Ranjan wants to know, should he sell now or should he average his price? What's the view?
Well, I have a neutral view on the stock, simply because the stock has corrected a bit and it's likely to show some reversal signs. The stock is nearing the 200 DMA, and I feel the stock can do well. If 200 DMA is sustained about, we have some closing about 261. So I would recommend to hold your positions, wait for the levels for the 271s to be taken out. And I feel further momentum can be expected about 284. So I would ask, him to hold his position and put a trailing stop loss near 240. Let's say if we have a dip below 240, he should book some losses.
All right. I do want to pull up Enviro Infra, because this is a stellar listing. It's turning out to be a lot. Of course, it's off the high point of the day. It's up about 43% as we speak right now. Of course, it is the new kid on the block. It listed on Dalal Street today, and very strong listing. Subscribed 61 times, so there was quite a lot of retail interest. We caught up with the management and started by asking them if the 100% growth that they saw in revenue, EBITDA and profit in FY24 is sustainable. Listen in.
The CAGR of the company was around 80%, and the EBITDA margins were around 130%, and and CAGR on the PAT, it was around 132%. If we look at the performance of the company in the past, we are quite confident we will be able to maintain the same growth. Looking forward, the same number we will not be able to achieve, but the growth will be in the range of 30 to 35%.
Okay, so 30 to 35% is the growth that you'll plan to achieve for the next 1 to 2 years, as you said. And the margins, do we expect a further upside from these 23%, 24% levels, or will they also sustain in a similar range? Mr. Manish, and I'll come to you on this.
No, they will be sustained in the similar range. We are quite confident whatever we have done in the past, we will be able to maintain the same growth pattern.
Okay, now coming to the order book of the company, so 23 to 24% of margins along with 32 to 40% growth. Now coming to the orders of the company, you've had an order book of about 1,906 crore. This is across 22 projects that we are looking at. Want to understand what is the execution period generally like, and in the next half, how much do you plan to execute from this order book that you currently hold?
The order book of the company as on 30th of June 2024 was 1906 crores. One more project, which is a HAM project, that got added to the order book. The size of that project is 267 crore. The total execution cycle of the project is in the range of 18 to 24 months. So this entire order book, that should get replicated into revenues within 2 years cycle. Going by the past trend, the way the company has been executing the project on the back of the execution capabilities, so the timeline, within those 2-year timelines, we are quite hopeful that the growth momentum the company was doing in the past, we will maintain that growth momentum, and the same is being replicated in the current financial year as well. For first quarter, the results are already there, and we are quite hopeful we'll continue to maintain that growth trajectory going forward.
Right, so that was the management of Enviro, and just for the viewers' context, we'll play the full interview during the day, and otherwise also this will be available on our YouTube channels as well. We'll take the next query. The next query is from Vandana, who's from Karnataka, and she wants to know which is the best stock amongst the Adani stocks to buy at this level, and it will have more than 20% uptake in the next 1 month. Kushal, I'll come to you for this one. Your view on the technical side of things for the Adani stocks, which one do you think will be the best pick according to you?
I think Adani Green Energy is one of the stocks that can be kept on radar, especially because, when you see the stock has almost risen 395% from the February lows. And against that, we've just seen a 60% correction. So I think that's a good sign where the savvy investors are continuing to hold their positions, which has limited the drawdowns as compared to other Adani stocks. Plus, the kind of recovery that we've seen throughout the week is quite, commendable. So I think this is considering the oversold conditions, high oversold conditions in Adani Green, I think the stock can do well from a short-term opportunity. So probably, this is the stock that, can be kept on radar and looks good for buy. So my initial targets on the stock is, close to 1420 levels and 1450 levels. Probably when these levels are sustainable, we can, hope for a further upside towards 1650.
Okay, thanks, Kushal, for that view. I believe we've got a caller that is logging in from Indore. Jeet, thanks so much for calling us. Do we have Jeet on the phone line? Let me confirm that. All right. Jeet, what is your question for us today?
Hello. Hello.
Hi, Jeet. Thanks so much for calling us.
Hi, good morning. How are you?
Good morning. Very well. How can we help you today?
Thank you for asking. Well, I own about 300 shares of Ion Exchange.
Yes.
So my query is basically, is that particular stock, is it good for long term? Or should I just book my profits or my losses, whatever it is, in the future?
Okay. So you bought at levels of 648. Can you tell me when you bought?
I bought it actually a month ago.
Okay. And what was the intention that you had? Did you buy based on the price action, or did you see something in the fundamentals of the stock?
Well, basically, the reason why I bought it was because I see that was the only particular company which was in India itself that works in the water space. So that's the reason why I bought it, and nobody else does what they do. So I was wondering if it's for long term or short term.
Incidentally, the stock that just listed today is in the water treatment space, and it's doing particularly well. And there are a couple more I must point out. If I'm not mistaken, Vatek Wabag is also in the space. Jeet, so let me get you a fundamental view on this. Gaurang, there are a few companies that play in the water treatment space. Is this the best option available, Ion Exchange?
So the one where it got listed today, we had an IPO note from a long-term point of view on the subscription side. That's a disclosure from my side, Alex. Well, I won't be specific to help out Jit with respect to ion exchange, but this is also a very sound company in terms of water treatment, affluent treatment, etc., etc. But the other name that you mentioned, that is Vatek Wabag or Vatek Wabag, this has been a wealth creator. If you see over the last maybe about a year or so, or a little bit more than that, a year and a half, stock was languishing at about 300 to 500 for a pretty long period of time. And then I think the opportunities that the management was talking about in terms of the order book execution, and more importantly, Alex, this company, Vatek Wabag, if I'm not mistaken, it is also into desalinization of water. And that's a huge opportunity as far as India is concerned and the rest of the world is concerned. Prudent to give a disclosure, we have a fundamental coverage on Vatek Wabag. And as we go forward, I think the government at the center and the government at various states will do a lot to conserve water and, of course, to create more resources in case if there is any deficit with respect to the monsoon season that we have. So this is a good company, Vatek Wabag, but I won't be able to be answering specific in buy, sell and hold with respect to the investment he has because we don't have coverage on that.
Sure. Oh, I forgot to give you the standard disclosure. We spoke about the Adani group of stocks just a short while back. NDTV Profit, as you know, is part of the NDTV group, and that is owned by the Adani group. That is a standard disclosure that we have to take every time we discuss the stocks.
Right. Our next query, Alex, is from Nimesh, who's from New Jersey, USA. He's holding 28 shares of TCS and he's bought it at the levels of 3720. If we can pull up TCS and see what price it is trading at right now, it's trading at 4287. So he's sitting on good amounts of profits, and he's been holding it from a long-term perspective, and he wants to know in terms of he's saying that TCS is trading sideways. Please advise whether to sell and swap the funds to any other IT company. Gaurang, I'll stick with you for this one. Your view on TCS, because he's been holding it from a long term. Do you think that he should keep holding it or he should switch to some other IT company?
Well, I would not advise him to switch to any other IT company because, as we all know, TCS is the flagship and frontline IT company. And over the last maybe about a year or so, especially over the last 2 or 3 quarters, the earnings momentum for the IT sector has only improved quarter on quarter. And our sense at Geojit is that this is going to be much better in the third and the fourth quarter in the coming financial year and even after that. So we have a disclosure coverage fundamental side, buy side on TCS with target of somewhere close to about 4,600. And I would very humbly disagree with Nimish that the stock has not done anything. I think if you look at the stock for the last 6 months, 1 year, year and a half, 2 years, this has been one of the performing stocks along with other frontline IT stocks as well as mid cap and small cap IT. And we have almost about maybe more than half a dozen companies on the fundamental side coverage long term in the IT universe. But I would say that this is a large cap name, and on the number side, it has done quite well.
All right, and of course, IT just seeing a little bit of profit taking yesterday, but the index as a whole has done particularly well in the month of November. I'm coming to you, Kushal, in the next one, which is a short-term view on Canara Bank, which is a question coming from Jalandhar. Anil is writing in. He points out that he's a senior citizen at 74. Sir, thanks so much for taking the time and for viewing Ask Profit. Hopefully, the direction on this show is helping you out. He's bought at levels of 109. He's got a considerable holding of 5,000 shares. Kushal, what should he do? Should he hold or exit?
No, he should hold at the current juncture, because if you see, the stock has corrected almost 27% from the record highs, and it's now attempting to bottom up. Right, so we see a formation of double bottom happening, which is indicative of a trend reversal. But like I said, there's 200 DMA acting as overhead resistance. So there's going to be a limited upside. So I feel he should hold, and I think on the upside, I feel 111 is a crucial resistance. And let's say if that level is taken out, I anticipate furthermore upside towards 120 odd levels. So the current juncture should definitely hold with a strict stop loss of 98.
We have our next caller from Vizag. Gautam from Vizag is calling us. Gautam, good morning, and how can we help you?
Yeah, very good morning. I have purchased Suzlon shares. Total number of shares is 3,692 at the rate of 77 rupees. So my question is, I just want to average the price by buying more stocks. When should I buy? That's my question. And I can wait for another 1 or 2 years.
All right. So you want to know the quantity and the price at which you can purchase, make the next purchase and average out the price at which you've brought, right?
Absolutely.
Okay. Kaushal, I'll come to you for this one. Your view on Suzlon. He wants to know what levels can he enter exactly into the stock.
So right now, my view on Suzlon Energy is a bit bearish, considering the lower lows and lower high structure formation that's happening. And again, the shorter term moving averages have been acting as constant supply zone. So I would advocate, for the stock to just move up about 71, 72 odd levels, let those levels sustain. And I think that will be an ideal entry point. Until then, I would ask to avoid the stock.
But would you say hold on to whatever you have, Kushal?
Yeah, with a strict stop loss of 60.20.
Okay, that's
so
not too
if
far.
we see stop loss, yeah,
that's not too far from where it is right now. Thanks so much for that. Hemlata is asking the next question. She's got Tata Elxsi allocation, Gaurang, in IPO, and she's wondering whether it can be held from this point as well, based on the fundamentals. The stock is currently trading at 6,700. She's holding 400 shares. What's the view?
If you got it at the IPO, you should be laughing your way to the bank, isn't it, Alex? You have no reasons to repent, right? So,
I wish it was. I wish it was me laughing as much as I'm sure that she is laughing.
No, Alex. What you don't have, you never lose. So don't worry about it. Okay. Now coming to the stock. This is one of the small cap IT stock that we've been extremely positive. Unfortunately, last financial year, there were some large disappointments, if I'm not mistaken, in the second and the third quarter. Things have started to improve for Tata Elxsi from a long-term point of view. And the areas that which operates, I think it opens up great opportunity, Alex. If I'm not mistaken, our targets are in excess of 7,300 or 7,500 plus on Tata Elxsi. This, of course, I'm speaking on the fundamental side from a long-term point of view. So no need to hurry, stay invested.
The view. I believe we've got a lot of people that are holding on. Chandan has been holding for some time. We've also got Kantesh and one more, Saurabh. Do stay with us. We have to unfortunately slip into a very quick break. We'll be back on the other side to take your questions. And thanks so much for your patience.
Recognize contribution.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30
Maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Welcome back to Ask Profit. For viewers who are just tuning in, you can ask all your stock related queries, whether they're fundamental or technical, on the number that is flashing on your screen. You can call us on the number that is flashing right now, and you can also WhatsApp us to the number that will flash immediately on the screen. There you go. The next question is from Lavish, who's from Indore. His query is for Gaurang, you especially. He's bought TD Power 500 shares at 455 a piece. He wants to have a view on the stock, whether he should keep holding it or not. Gaurang?
Yeah, so on TD Power, we used to cover this particular stock. Currently, we don't have a coverage. That's a disclosure on my side. But I think one needs to be very thoughtful about investing into power transmission and distribution and equipment related sectors. So our sense is that this is a very strong company in terms of balance sheet. And with the capacities that India is going to come up in terms of new power generation, Power transmission and power equipment related companies are going to do extremely well.
Chandan is joining us from Karnataka, and he's got an interesting stock that he's bought in IPO, and that's KR Heat. Chandan, thanks so much for calling us, and good morning to you. What was the thinking when you subscribed to the IPO?
I was investing for long term.
Okay, and so when you read about the company, what stood out to you?
It was good. It was one of the only company in heat exchanger, no? So I applied it and I got an IPO.
Excellent, and you've been rewarded for that thinking as well, Chandan. So what do you want to know? You want to know whether to hold on or to sell, right?
Whether to hold for 1,000 or book profit at CMP.
Okay, and what is the quantum of shares that you got?
65 shares only.
65 shares. Okay, so Gaurang, on the fundamentals, Chandan has got allocation in the IPO and it's done particularly well in that time frame. The question is, should he add more, should he hold at the current price or sell? It's an interesting company, wouldn't you agree?
Well, it's one of the best players, Alex, in terms of the heat exchanger market, an emerging player. The floor was at about 209 to 220. This was in the month of September 24. We had an IPO note on the subscribe side from a long-term point of view. This company basically manufactures core components which actually go into air conditioning and refrigeration, aluminum and copper fins, and along with that other condenser coils, etc., is what the fluid and steam coils, etc., they manufacture. They've got some niche and marquee names as clients like Daikin, Schneider, Blue Star, etc. And the overall global market for heat exchangers is right now growing at the space of 6.4%, which is likely to pick up speed as we go into the future. So hold on from a long-term point of view.
All right. The next question is from Ajit, who's from Bhopal. He wants to add 200 shares of Tilak Nagar in his portfolio for the... okay, so he wants to add 200 shares and he wants to know if this is the correct level to add Tilak Nagar or not. Kushal, I'll come to you for this one. Do you think the charts look attractive for Tilak Nagar right now?
Well, they do, but like you said, the stock is quite extended. The stock has almost moved up 61% from October lows. So I would recommend to, hold on for a bit, let the stock correct a bit, let some mean reversion happen. That's when you enter.
Levels that you would suggest to enter?
It should be around 380 to 370 odds.
Okay.
Okay, I believe we've got so Kantesh Reddy, who's calling us from Karnataka, and it's an interesting stock. Gaurang, I think this one's going to be for you. MRF, he's got one second. What is your holding? I'm maybe reading this wrong. You've got one share or what?
Yes, sir, one share, sir. Good morning, sir.
Good morning, Kantesh. Thanks so much for calling. What was the thinking when you bought MRF?
Sir, I am a first-time buyer in stock market, sir. Since 1 year I am invested, sir.
Okay.
1,18,600 rupees I have invested, sir. I take personal loan and invested for MRF, sir.
You took a personal loan to invest in a stock, Kantesh? Is that right?
Yes, sir. Yes, sir. Right, sir. Right, sir.
Okay, but why did you take a personal loan, Kantesh?
Sir, I am very interested in do stock market. That's why I have taken loan and invested, sir, in the stock market, sir.
Okay. Can you...
1,50,000 I taken, sir, and I buy one MRF share and some of my sovereign gold bonds, 5-6 sovereign bonds I have buy, sir.
Okay. Kantesh, did you get some advice to take a personal loan on the basis of which you bought the share?
No, sir. No advice, sir. But my own thinking, sir, only personal loan is 11%, sir. I have long time version also. That's why I have taken personal loan and stock market will give good return. That's why I have.
Okay, that's a good thinking. Let me just but clarify that. Okay, Kantesh, that was a thinking that you had. How old are you, Kantesh?
Sir, only 28 years, sir. I am working in professional as a banker, sir.
Okay.
Okay, sir. I have some mutual funds of 3 lakhs rupees and different portfolios.
Okay. So when you bought MRF on the loan that you've taken, what was the thinking in terms of how long you will hold it?
Sir, I am owned for nearly 20 years, sir, 30 years, sir.
Oh, you're willing to... Then why did you take a personal loan, Kantesh?
Sir, my salary is very low, sir. That's why I had taken the loan and invested, sir.
Okay. So, Kantesh, the idea to buy the stock is a great idea. But the idea to take a loan to buy a stock is a very bad idea. So you should never do that. And if possible, I'm sure that Gaurang will agree with me, you must not do that. And he will give you advice, of course, on the stock that you're holding, which is one unit or one stock, one share of MRF. Gaurang, would you agree that he should ideally close out this personal loan as soon as possible and use his regular income to purchase stocks that are available to him that don't have such a high ticket price?
Alex, you need to give me 30 seconds or more to answer this, because your PCR was telling me to be as short as possible and as brief as possible.
No, please, for this I will make an exception.
Kantesh Reddy, my friend, you are brewing a perfect disaster, lethal recipe in terms of what you're doing. You are saying you're a banker. By the virtue being a banker, I think you should possibly be aware about what are the do's and don'ts when it comes to the financial discipline and investing into stock market. You are 28 years of age. You've taken a loan of 150,000 rupees and you bought one share of MRF at about 118,000 rupees. My friend, don't put borrowed money into the stock market. You know, that's the basic principle. You should put whatever you have, whatever you can afford, and invest that into the stock market. There is no guarantee, there is no warranty of any kind of surety as far as market returns are concerned. It can go negative, it can go positive. You are willing to wait for 15, 20 years. You should have saved, if you are at 28, you should have saved from 20 if you like the stock market, and whatever you saved, you would have put it into the stock market. That way you would not burn the midnight oil and not be able to have sleepless nights at home. By the time you possibly look that kind of horizon, how much interest you will be paying? Have you calculated that, my friend Kantesh Reddy? Please have this clarity in your mind. Though the company that you invested in, MRF, it's a very strong company. We used to cover this company, Alex, when it was at about 15 or 20,000 rupees. Then it had reached our target price and we have dropped the coverage. But this is a lethal combination what Mr. Kantesh Reddy is doing. I think you should never borrow money and put into stock.
I was stunned enough to say that this is good thinking. I did not mean it that way. Please remember, do not take loans to invest in the stock market or to trade for that matter. It's a recipe for disaster, as Gaurang has just pointed out. Kantesh, of course, what you're holding is a strong company, as Gaurang has pointed out, but the likelihood of you getting over and above what you have to pay on interest over the long term. Remember that the Nifty 50 over the course of the last several years has only given you 14% per year. And that's a reasonable return to have. But think about it, if you've taken a loan at 11%, your take home is barely anything. So why would you do that? Anyway, let's move on to the next question, and we've got several that have come through. Apologies, we had to take some time to address this. Viewers, I'm sure that you will understand the reason why we have spent this time. Asian Paints is the next counter we're talking about, and Datta is writing in from Singapore, and he's holding 70 shares, which he's bought at levels of 2,000, and he's wondering what the future of the stock is. And quite a bit has been said about the fundamentals. So, Gaurang, a quick view on Asian Paints, would you hold on?
Well, we're maintaining a hold despite of the disaster numbers in the Q2 as well as the huge competition that the company is facing. It's a niche and market name, not only present in India, has got operations in the overseas market. 3,000 plus is the target from a long-term point of view on Asian Paints, Alex.
Let's go to the next one.
All right, the next question is from Kishore, and his question is on Sterling and Wilson Solar. He is holding 4 shares at 548 a piece, and he wants to know whether he should keep holding it or sell for the next 1 year. Kushal, I'll come to you for this one. Do you have a view on this particular counter? How does it look on charts?
But my view is a bit bearish. I would want to wait for 528 levels to taken out. Until then, I feel certain bearish implications may persist. So my view is just hold on for the stock price to close above 530. And if you're holding, I would recommend a trailing stop loss of 466.
All right, we've got a next caller, Nagraju, who's writing in from, who's calling us from Karnataka. I'm getting my mediums mixed up. Nagraju, thanks so much for calling us. You've got TCI Express, right? What was the thinking when you bought, and what is the time frame that you had in mind?
Sir, that is a short-term trade.
Okay.
But about 3 months back, the market was bullish.
Yes.
This is a logistic company.
Yes.
I think it is in a bullish and the market was uptrending. So I thought it will appreciate. But initially it was appreciating 1 or 2%.
Yes.
And I purchased at the price of 1, 2, 3, 4. Later on, is it slowly coming down? Now it is almost 20 to 30% down.
Yes.
Now what I should do, whether it is shall I hold or shall I hold for another 6 to 1 year?
Okay.
Or shall I book loss now?
Okay. Nagaraju, since this was a trading idea, what is the time frame that you initially had?
Short term, that is only positional trading for a swing trading purpose I did it.
Short. Okay, understood. Kushal, I'm going to come to you on this one. If you bought at elevated levels, and there are going to be quite a few names in the broader markets that have seen this kind of a move. But here's where the importance of a stop loss comes through. What would you suggest that he do with this right now? If you bought at levels of 1,234, the stock is trading just above 800. What would you do with TCI Express?
The stock is like a falling knife and it's too risky to catch a falling knife. I would recommend to keep a very tight stop loss near 790. And if the stock is plummeting below 790, it's best to book your losses.
All right. The next query is from Amit Pandey, who's from Bangalore. Now, he's purchased 217 shares of Tips Music at an average price of 709 over the last 8 months, starting from March 2024. And he wants to know if he can add more or sell full or partial of its existing portfolio from a medium-term horizon. Kushal, let's stick with you for this one. Do you think the charts look attractive for this counter, or should he sell?
Well, the charts are very attractive and the primary trend is quite positive. So I would recommend to hold your investments, put a trailing stop loss near 839, 835. And I feel there's a good potential upside for another 12 to 15% on the short term.
Do you have the message in front of you? Is this Tips Industries or?
No, Tips Music.
Tips Music.
Yes.
I hope this. Yeah, okay, cool. All right. So we got that right. Tata Technologies is the name of the counter, and Manu is asking this question. He's bought at levels of 1,172. Let's pull up the chart. So he has lost a little bit of ground, but he's got a 2 or 3 year time horizon. And Gaurang, from that perspective, would you accumulate at these levels?
So Alex, the floor was I think 585 to 600 for Tata Tech IPO. We had given a subscriber recommendation on Tata Tech IPO from a long-term point of view. Despite the fact that he's gotten at higher levels, he has 2-3 years kind of time horizon. So I'll make that IPO report on the subscribe side as a base and give an advice that hold on to it. And possibly if you have investable amount, that I think current levels somewhere close to about 930, 940 are decent levels to even average a little bit more.
All right, then we have the next caller from Doha, Qatar. Sumit is joining in. Sumit, welcome to NDTV Profit. How can we help you?
Good morning, ma'am. Ma'am, first of all, I just want to thank you that ND Profit by sharing your research and information, and it helps us to create a portfolio. I do not have any pharma stock in my portfolio, and I just want to add one pharma stock of large cap for the next 3 or 4 years. Which one should I add?
All right, so I think your query is pretty clear to us. Gaurang, I'll come to you for this one. What is your topic in the pharma stocks?
Well, I think Sumit has identified a good sector, and within the pharma universe, we are extremely excited about the CDMO segment companies, that is contract manufacturing and kind of companies, which is a huge market, not only in India but also in the overseas market. So if I have to identify one particular, though there are almost again over here more than half a dozen companies that we cover, but I think Cipla would be a perfect investment idea because it has a combination of both local as well as global markets, and it is also operating in the CDMO space.
Okay. I believe we've got Ramakrishna on the phone line. Ramakrishna, hold on. We're going to take a couple of questions from WhatsApp and then come to you on your question. So do have a little patience with us. Realtel is the name of the counter that we're talking about next. And this is a question from Shri. He's writing in from Toronto. So we've got international on this. We got a caller from Doha and now Toronto question. He's a long-term investor holding at a price of 532. So he's got a 3 to 5 year time frame, but he's looking at the numbers and he's looking at the performance on the charts, and he's not too happy with how it's gone. The stock has given up a little bit of ground. He's bought at 532. Stock is just above 400. Kushal, on the charts, what's the strategy that you would employ right now?
For Realtel, right?
Yes.
Well, my view on Railtel is it's turning a bit positive. I feel 415 is an immediate resistance level. Once the resistance level is surpassed on a closing basis, I'm expecting a target of 456.
Okay.
All right. I think we have our next caller. We have Ramakrishna from Bengaluru who is joining in. Ramakrishna, welcome to NDTV Profit and a very good morning. How can we help you?
Hi, thank you. Thank you for allowing me to ask a question. I have 2 lakhs of investment on Tata Consumer, around 155 shares at a price of 957.
Okay.
At a price of 1025. Now it is at 957. My long-term view is 3 years, so I would like to know if I can continue.
All right. I just want to know with what perspective have you bought Tata Consumer? What were the rationale?
The simple reason is I have been using some LIC, and I see that a lot of LIC are having those share in their portfolios. So I thought it is a very good bet.
Okay. Gaurang, I'll come to you for this one. Do you think that Tata Consumer is a stock from the FMCG space that he should keep holding?
I definitely think so. I think Mr. Ramakrishnan has identified a strong company from the Tata Group, Tata Consumers. It has got power brands like Tata Sampann. It has already ventured into organic food products as well and has launched a couple of products over there and many more to get launched. Unfortunately, the second quarter for FMCG pack was a little bit below the weather, and hence we saw the correction. 1225 is the target as of now from a long-term point of view. A disclosure, if the earnings improve, we will scale the target upwards.
We've got a next caller, Vishwanath Reddy, who's calling in from Andhra Pradesh. He's got GAIL at a price of 41. Vishwanath, what was the thinking when you bought? How long do you want to hold it for? Morning. Vishwanath, hi, can you hear me? Okay, I think we've lost him. Do we have another caller? I think we might have another caller. We have Vinay on the phone line. Vinay, I believe you're calling in from Hyderabad. What do you want to know about?
So I have 2 stocks with me. One is Zydus Life with a shares of 435 with a price of 975. And Tata Motors price of 1049 with 415 shares.
Okay.
Can I do the average? I'm just looking for a long-term horizon of 1 to 2 years.
Okay. Let me take your question on Tata Motors, because I know that we've got Gaurang, who's got a very specific view on Tata Motors, and he's been a long-term bull on the counter. Gaurang, it's given up a little bit of ground in the recent past because of the various factors that are playing out globally. Would you say that it's a good level to accumulate?
Well, I think from 1150, 1200 plus levels, correct me if I'm wrong, Alice, this has corrected to sub 800, 750, found a base, and then it's kind of recovered its lost ground. We're maintaining a target of 1100 on Tata Motors. I think things are going to change around as we go forward into the launches and, of course, the domestication of GLRs in its plant in Gujarat, Sanand. We maintain a positive view with 1100 targets on Tata Motors.
Okay. It is now just about winding up time for this program, and we're going to have to shut the phone lines, but it's time to hit the rapid fire segment, and this is where we throw as many questions, gentlemen, at you over the course of 2 minutes, and do try and answer as many as you possibly can. The first one I'm throwing your way is Ambuja Cements, and this one's for you, Kushal, on the charts. If you've got a time horizon of 6 months, Jaya wants to know whether you should buy at this current juncture.
No, I would definitely recommend to avoid buying the stock until unless the 603 levels are crossed, because that is supposed to act as very heavy resistance. So yeah, I believe once those levels are taken out, I think then it'll be an ideal buy. Till then, you should avoid the stock.
All right, the next question is from Sonal. She's from UAE and she wants to have a view on Raymond Lifestyle. She's bought it at 2,400 rupees. Gaurang, your view on Raymond Lifestyle?
Well, on Raymond's, we have a coverage from a long-term point of view, and my sense is that the opportunity is going to open up positivity in terms of numbers.
Okay. Coming back to you, if you've got a view on PG Invit, Power Grid Invit, if you've got a purchase price of 99, you're planning to hold for the next 10 to 15 years, it's still a good idea. Ajay wants to know, Gaurang.
Well, so we're positive on Power Grid as such, Alex. Okay. I don't know how much it will reflect upon the Invits, but the entire transmission and distribution sector looks quite good.
Okay, Bala Murugan from Chennai is asking whether this is the right time to enter Reliance stock or not. Kushal, your view on this?
Well, if it's a risk taker, I would definitely advise to start entering Reliance because it's quite at a crucial demand zone. So I think the risk reward is quite favoring. So probably it's a good buy. Keeping a strict stop loss in mind, which should be around 1200 levels.
Okay. Prashant wants to know about the defense space, and quite a few of these stocks have been buzzing in the recent past. Kushal, on the charts, does anything look attractive from the period of 6 to 12 months?
Well, I'm positive on BEL and Mascot Dock from the space. I feel they're forming a nice basing pattern and they're attempting to bottom out. So yeah, those are my two picks for a potential 12 to 15% on the upside.
All right, one last quick question to you, Gaurang. Ajit is holding 100 shares of Avalon Tech. Should he keep holding it?
I'll give it a pass. We don't have coverage. I'm sorry.
All right, then just one last view on BEL since he mentioned, Kaushal, your view on BEL?
He's positive.
Kushal already gave his view. So Gaurang, I'm asking you.
Well, 335 is a target, and I think it's one of the best placed stocks in the defense PSU category.
Okay. Gaurang, Kushal, thanks so much for taking the time. Pleasure speaking with you as always, and happy Friday and happy weekend to you. Viewers, we're completely out of time on this edition of Ask Profit. We've tried to help a lot of you over the course of the last 1 hour. Thank you so much for your patience, and hopefully this helped you. From Mahima and myself and the team that put this show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
For everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. Could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow.
Hello and welcome. You're watching the Small and Mid Cap Show. Well, in this show, we take you through some conversations with the outlook of companies and, well, conversations around what we can expect from the managements of these companies. First up, we are in conversation with the Chief Financial Officer of Gulf Oil Lubricants, Manish Gangwal. Manish, thank you so much for joining in. Well, I want to start by asking about the company making significant acquisitions in the EV-related businesses, and I want your view and your way forward as to how things could potentially pan out for the business is in this area specifically.
Yeah. Good morning. Thanks for having me on your show. Basically, as a lubricant company, we are primarily a lubricant company, and we have been, servicing our entire range of automotive and industrial lubricants for last many decades in India. But EVs started becoming sort of talk of the town, and more people will be looking at EV as an option going forward. While we believe that lubricants market is going to continue to grow in India for many decades still, but we as a company, wanted to look into the EV value chain and where we can play as our role in the EV value chain. And what we figured out was that we have a very strong brand which is known to the automotive consumers. Today they may be an ICE vehicle consumer, tomorrow they may be an EV consumers or EV buyers. How to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network. With that thought process, we started looking at the sector, and what we came through was that manufacturing of chargers is a good opportunity. And as the EVs grow, there will be a requirement of more and more chargers for the EVs. And that's where we started acquiring companies. We acquired a company called Indra Technology in UK, and their expertise is slow chargers, slow AC home chargers for cars. And then we acquired another company in called Tyrex Transmission, based out of Ahmedabad. They are having DC fast charger products. So we have now complete end-to-end charger solutions for any of our consumers, buyers, customers, OEMs. So right from AC chargers to fast DC chargers, we have a complete range.
Right. Manish, at least as far as Tyrex is concerned, we understand that you had strong revenue growth in the second quarter. Even your other acquisition, taken together, can you give us an idea about kind of contribution that these companies can bring forward to your consolidated numbers, if not for the next 6 months, for perhaps the next 18 months?
See, our objective in Tyrex, particularly where we have 51% stake, and they are fast growing. When we acquired this company in October 23, their last reported FY23 turnover was 12 crore rupees. So on a very small base, then we doubled it in FY24 to nearly 25 crore rupees. And as you rightly mentioned, in H1 itself, Tyrex has delivered 25 crore so growing at nearly 300% over H1 last year. So this company, overall, the demand is very good. And we believe that the company can at least double the turnover every year for the next 3, 4, 5 years. And, should be easily doable, which means that we are aiming at roughly 500 crore rupees, at least turnover in next 3 to 4 years from this acquisition.
And when it comes to profitability for both these companies, Manish, what's the way forward? When can we expect them to be in the black?
So currently, they are EBITDA neutral at this stage. What we are also doing is that the company is investing into R&D company is investing into a lot of service network required for servicing those chargers and installations and all those capacities. Plus strengthening the manpower. We are expanding the capacity of the plant now. So there is a lot of investment which will be there in these building the company into a very, very formidable company, a very strong player in the market. But we believe that once we reach a size and turnover scale, the company should be able to deliver at least 12 to 15% EBITDA margins, which is what the lubricant business is doing. So it will not be a margin dilutive business on the consolidated basis.
And I think going forward, we will have officials from the Ministry of Statistics with us in these press conferences so that questions related to statistical estimations, they will be able to shed more light and offer better perspectives than I will be able to do, since I will be coming from the macroeconomic angle. So I just wanted to inform you about the presence of these two officials on the call, and my sincere thanks to them for being here. I think advanced economies, I talked about the fact that manufacturing and mining have been principal causes of the slowdown, and especially coal, natural gas, and crude oil constitute nearly 50% of the mining sector, and they have been tepid in the second quarter, and that is the reason. But if you look at the global scenario, you can see in the second quarter, manufacturing purchasing managers indices came down below 50 in the European Union, and also globally in general it was below 50, whereas in the case of India it has remained above 50, emerging as you can see on the right side of your chart. So there is an impact coming from the global supply chain uncertainties, partly because of the unexpected growth under recovery in the in China, which also led to concerns about higher imports from that source, from that country, which would have also had an impact on domestic prices and therefore domestic manufacturing. And some of you may recall the press conference and statements made by Mr. Narendran of Tata Steel in this regard not so long ago. And also geopolitical risk and uncertainty flared up in the second quarter, leading up to the presidential elections in the United States. More importantly, there has been a very big spike in trade uncertainties as the election season progressed in the United States. So, and the global supply chain pressure index also went back up below zero. So we want to put the second quarter slowdown, which is, while most of us anticipated it, in the light of the excess rainfall and therefore lower footfalls in purchase of consumer durables, and also some religious observance days falling fully in the month of September, we wanted to give you some more perspective on the higher than expected decline in the growth rate, which is the second derivative, and global factors play a role, and some very specific sectors in India within manufacturing and mining are also playing a role. So one should be able to interpret the slowdown, therefore, in the right perspective. And that is why these global developments naturally showed up in the suppliers' delivery times index becoming slower, and also growth in new export orders moderated much more sharply in the case of India's manufacturing goods. So there is a shadow or a spillover from global factors on domestic manufacturing, which is what we see in the data as well. But however, what we need to focus on, remembering the fact that we are already 2 months into the third quarter, and the current financial year is barely 3 months and a week away from concluding. But I think by and large, we should expect to see the growth in second half of the current financial year when it is reported. We will get the first estimates in January, the advance estimate, and then the first preliminary estimate in February, and of course the other estimate in May as well for the full financial year FY25. So what we are seeing in this slide is the fact that kharif production has been very high, both in the food grains, in rice, and also there is higher MSPs, which should incentivize rabi sowing. water storage in reservoirs is very adequate for the Rabi crop, and fertilizer availability is at comfortable levels. So the kind of pickup in agricultural sectoral growth that we have seen in the last 2 quarters, we expect it to continue in the second half of the year as well. Industrial activity, as we said, continues to pick up in the expansion zone, and I think fuel consumption, as you can see in the bottom table, compared to July, September, October was higher, and so was power consumption. And the uptick in e-way bill generation from 10.9 to 11.7 from August to October is also encouraging. Services sector continue to be resilient. Services sector PMI is being consistently in the expansionary zone, and UPI transactions, both volume and value, have seen a sharp uptick in October, and there is double-digit growth in air cargo activity while port traffic remains steady. Moving on, I think we all know that the passenger vehicle sales in October helped the industry clear a lot of inventory, two-wheeler and four-wheeler sales, and domestic air passenger traffic handle has not only seen a level shift up in the volumes compared to the previous 2 financial years, but you can see the slight upswing on the right side of the right side chart in the green line in September and October as well. Rural demand has been a bright spot, as we have been writing in the monthly economic review, which we publish around the third week of every month. On the left side, you can see about 7 consecutive quarters of growth in rural demand based on the Nielsen IQ data, and two-wheeler and three-wheeler sales as well in rural India, while tractor sales is at an all-time high because of the expectations of a good Rabi crop on the back of a Kharif crop as well. Inflation in general, apart from very specific items in the food sector, in the food category, and also precious metals, in general, it has been on the lower side. And the Indian Institute of Management, Ahmedabad's inflation expectations, business sector inflation expectations survey has been pointing to declining inflation expectations rather than rising inflation expectations, confirming the fact that there are no second round effects coming from higher food prices, which in any case is concentrated in a few commodities. When it comes to the external sector, while the second quarter GDP data show that export growth indeed slowed down, I mean, we have seen that the export growth rate is 2.8% year on year compared to 8.7% in the first quarter. The fact remains that outside of petroleum, gems and jewelry, merchandise exports are in high single digits, and together with services, this core merchandise exports, excluding petroleum products, gems and jewelry, and together with services, we have seen 10.8% growth in the first 7 months of the current financial year compared to the 7 months of the last financial year. So I think in general, towards when the full year's data is out, we will see that net exports would have made a good contribution to overall economic growth than in the previous financial year. Yes, we are aware of the fact that in the month of October, there was profit taking or profit booking in the Indian stock market by foreign investors, also partly because of renewed excitement about China, shifting of some capital out there. But by and large, if you see on the left top chart, both gross FDI flows and net FDI flows are doing far better than they were doing last year so far in the first half of the financial year. And Indian domestic investors, both institutional and retail, continue to have faith in the Indian capital markets, providing it a certain measure of support and undergirding, so to speak. Well, there is concern about capital formation based on second quarter data. However, that is what prompts us to dig a little deeper and go into what's happening on the underlying drivers of capital goods. If you look at the capital goods imports and their share in total imports, they've been steadily rising. And also, if you look at the increase in capital and infrastructure goods production in the IIP, Index of Industrial Production, there has been a slight and steady uptick over the last several financial years in the first half, if you compare first half to first half of each financial year. And then if you look at the order books of capital goods producing companies, they are up 23% last year, which augurs well for private capital formation. That said, we acknowledge the fact that while we are talking about capital formation being critical, we should also remember that the global context keeps evolving and uncertainties are cropping up every year, whether it is the strength of the dollar, whether it is the potential for trade action elsewhere, and cheaper imports. There will be headwinds compared to the first decade when India's capital formation was growing at very rapid rate. So we need also to be realistic about the expectations for growth in general. While the trend is promising and the signs are good, we need to be aware that the global context is not the same as it was in the first decade when there was synchronized global growth, resulting also in capital formation growth. But as I said, private investment is gaining traction. This is basically new investments announced by the private sector has increased in Q2 in July to September quarter of this year compared to the July to September quarter of last year. Therefore, together, we are still keeping on track with the announcements compared to the last financial year in the first half. The banking system liquidity is now more comfortable than it was, and that should result in better credit growth, although credit growth in the first half of the financial year has moderated to a level of around annualized growth rate of around 10%, which is in line with the nominal GDP growth. And I think from the point of view of the economic growth objectives, I think credit growth, if it picks up in the coming months, it will also support economic activity in the coming months of the financial year and beyond. In the labor market, based on the quarterly data available for the urban labor market, we do see that labor force participation is picking up and unemployment rate is holding steady. The net payroll additions in EPF subscribers, particularly in the lower age category, young cohorts, net new joiners among the young cohorts in EPFO also has been rising steadily, in the sense that there is job creation or formalization or a combination of the two in the formal sector as well. I now turn from the GDP data also to talk about some of the underlying reasons for manufacturing in certain sectors, because if you look at the manufacturing sector and try to break it down, out of the 23 sectors in the Index of Industrial Production, 12 of them registered very high single-digit growth on average, about 9%, and 11 of them were almost close to registering zero growth in the first half of the current financial year compared to the last year. And these are more of consumption items rather than intermediate goods in further production. Why is it the case? And some of it has to do with the fact that I think both hiring and compensation practices in the formal sector have undergone a change post-COVID, despite the fact that profitability in absolute terms, profitability in terms of growth rates, and profitability as share of GDP have been at a 15-year high. If you can see that the share of regular wage employment is, after a big drop in the COVID year to 21.1%, has picked up, but picked up very slowly to 21.7%. The good news is that the casual labor share has gone down. Overall, self-employed rates have gone up. The other good news is that I hope this results in pickup in hiring by the corporate sector for regular wage and salary jobs, is the fact that Indians are taking to skilling in very, very significant way. If you look at both female, male, and the overall adoption of skilling, both in rural India and urban India, especially we have between male and female workers, there has been an unambiguous enthusiastic adoption of skilling, and therefore we hope to see this reflected in the rising share of regular wage salary workers. And we should also see this hopefully in real wage growth. What we are seeing in this slide is that the real and nominal wages in rural India for males, females, and in total between males and females put together, what you see is significant growth in nominal wages, but not so in real wages. Of course, we must understand that in rural India, the food component is higher, the rural CPI, and therefore, and the fact that the food inflation rate in the last few years has been slightly higher, although it is dominated only by a narrow set of commodities, that is one of the reasons why the real wage growth in rural India is somewhat lower or even negative, because of the higher weight of food items in rural CPI, despite its domination in a few commodities. But in urban India, it is interesting to note that real wages of males has actually increased over the last 5 years compared to pre-COVID, from 13,426 rupees to 13,834 rupees. Nominal terms, you can see that going from nearly 18,000 to 25,500. Female real wages a slight decline, but overall real wages have gone up from 12,847 to little above 13,000 compared to 2017-18. And also you can see the slight pickup compared to the last 2 years as well on the real wage growth. So real wage growth for urban male workers has done very well. And therefore that is reflected in the overall positive real wage growth. But nothing of this compares to the kind of profitability growth that we have seen. So if you notice that the profit to GDP ratio was 4.8% in FY24, the peak was 5.2% in FY 2008, but that was a different era when global growth was high and exports were booming, and overall economic growth rates, both in nominal terms, were in high double digits, or mid double digits and high single digits. Considering that post-COVID recovery in profit from 2.1% of GDP to 4.8% of GDP is an impressive growth in the last just 3 years post-COVID. But in comparison, both hiring and compensation growth rates have been somewhat on the lower side or tepid. And that is also somewhat endogenous in creating less purchasing power in the hands of people, less demand for FMCG goods and light consumer durable goods. And that is why you see the impact on that in manufacturing. So to some extent, the private sector's manufacturing slowdown in select areas is somewhat self-generated. In the outlook for the near term, of course, I think while the actual print of 5.4% in real terms is on the lower side of the expectations, the economy is resilient, as you saw in the case of construction, agriculture, and manufacturing. As I mentioned, 12 of the 23 sectors registering high single-digit growth, etc., and exports performing outside of petroleum products, gems and jewelry performing much better this financial year compared to the last. There is plenty of positive signs to take away in terms of the economy showing resilience, underpinned by steady demand and strong, partially, I would say, strong manufacturing and service sector activity. Record production estimates for Kharif food grains and promising Rabi crop prospects. Labor market is recovering, but as I explained to you in the last few minutes, we can do far better than what we have been doing, and the onus rests with the private sector as well because of the endogeneity of labor income growth and demand for manufactured goods. So better growth in labor incomes holds the key to sustained demand growth and capital formation in the private sector. Global crude oil prices are remaining low, and we think one of the possible benefits of the new administration taking office in the United States in 2025 will also be continued low energy prices, which is a very important ingredient because the counterfactual will be quite significantly growth negative. So energy prices will remain low and affordable and internationally, and that's a very important growth positive for India. What are the risk factors? Geopolitical conditions do remain fragile and will continue to impact domestic inflation if supply chain disruptions occur. And same will be the case with capital flows. They will also be impacted by potential tariff actions, which will impact both trade and capital flows. It may also lead to strengthening of the United States dollar, leading to shortage of dollar in global markets, causing exchange rates in emerging economies to depreciate, which would also tighten liquidity conditions in emerging economies, etc. And even if we have very ample foreign exchange reserves, as we do, and we will do far better than many other emerging economies, given the fact that we have a good interest rate support and foreign exchange reserves, we will not be exempt from the spillover effects when these conditions happen. So we should be quite realistic about the kind of world scenario, global scenario that we will be facing in 2025. And because of that, exports also face greater uncertainties. But we should also work on improving the state capacity to spend on capex across the country, and also the capital versus labor mix in the growth plans of the private corporate sector. As I discussed earlier, in terms of hiring and compensation, will also be an important determinant of how we can ramp up the growth rates and the overall regulatory environment. I mean, as we are seeing, even developed countries are beginning to focus on deregulation as a very important formula or ingredient for reinvigorating growth. And I think if we have to realize our employment, manufacturing aspirations, I think, and also therefore aid capital formation and investment, we have to double down on deregulation, particularly among state and local governments, and that will cause both the trend and the actual growth rates to pick up from 6.5% towards 7% and so on. So while the number may have been somewhat disappointing for second quarter real GDP growth, I think we should also use it as a good opportunity to put in place not only hiring and compensation policies and practices in the private sector, but also use the opportunity to double down on deregulation and think of enhancing state capacity for undertaking public investment rather than revenue expenditure. If we do that, then I think sooner rather than later, the second quarter growth numbers will become distant and fading memory. That's all from my side. Thank you very much. We are open to your questions. As I said, I have with me the DDG from Ministry of Statistics and virtually the Additional Director General present here. Thank you very much.
Thank you so much, sir, for throwing light on the sector-wise trends and also for the outlook for the near term. Now, I would like to invite questions from the media. So, sir, I have all of them in this thing, so I'm going to take the questions one by one. First of all, we have a question from Mr. Surya Murthy of the Telegraph. I think he has some technical problems, so I'll ask his question. So, Mr. Surya Murthy wants to know: do you think it is time now for RBI to cut rates?
I think it is. We have always maintained that we will not comment on monetary policy in public. I mean, all of us see the data. Central Bank is also seeing the data. They know what to do, and I will not be commenting on this question. Next question, please.
Yes, Mr. Lakshman Roy from CNBC.
Hi, sir. Lakshman this side. My question is, since you have projected economic growth in economic survey from 6.5% to 7%, now giving the number of Q2, do you think 7% is feasible, even 6.5%? And second question, since capex growth is also slowed down in Q2, so government should push more in capex?
Yeah, no, in response to your first question, I think we will go back and take a look at the possibilities of what the final outcome will be in terms of the eventual growth numbers for the full year. But let's also remember that these are first estimates in some sense, and our data are not seasonally adjusted, and the full year growth rates for FY25, you will get the first cut estimate in January and then February and then May. So I think it is too soon to say that even the 6.5% number is in danger. So I don't think we should extrapolate too much. Now, as far as the capex is concerned, as I said, the capex slowdown was across all levels of the government, union, state, and central public sector enterprises. So there is definitely a need to examine the impediments that stand in the way of capital formation. As I said, some of it could have been due to excessive rainfall in the second quarter, uncertainties related to the election season, and therefore capex has room to ramp up in the remaining 3 months of the year. Right now, as we speak, November data, we don't have it yet. So I think, again, the numbers are there for all to see, and therefore capex growth will pick up in the coming months is our best hope. Next question, please.
Sir, before we take the next question, I would just like to make an observation that request Mr. Sanjay Kumar and Dilip Sinha that to also take note of the questions in case they have additional remarks at the end of the question and answer session.
Yeah, in fact, I told Mr. Dilip Kumar Sinha after my presentation was over, before we went on to the Q&A, whether he wanted to say anything. Please go ahead. I know if the camera, you may probably come a little bit closer, pull your chair and be the cam. Yeah.
Good evening, everybody. Am I audible?
Yes. Yes, you are audible.
Yes, sir. Yes, sir.
Yeah.
Yeah, Chief Economic Advisor has already covered the entire gamut of this story very, very nicely. Just I would like to add one thing. As he mentioned that the manufacturing sector could not perform well. And so even the thing is that though the output of manufacturing sector was modest, but the cost of production, that is in intermediate consumption, it registered higher growth rate. And GVA is output minus IC. So accordingly, the GVA growth rate was even lower than the output growth rate. So that's the point I wanted to add here.
The ADG, Mr. Sanjay, did you want to come in or?
It's okay. So it's, everything has been covered.
Okay.
So I have nothing to add.
Okay. Okay. Thank you.
So, sir, we can also.
Dr. Bashir, you can continue with the Q&A. Yeah.
Yes, sir. So now we move on to Karishma from Business Today.
Good evening, sir.
Good evening.
So my question is, do you think that US elections and Donald Trump's decision of likely imposing higher tariffs on India could challenge our ambitious growth path?
I think it's very difficult to give you precise answers. We are aware of the potential scenarios. I don't think we should jump the gun on this matter because there are some areas on which we will actually benefit, as I mentioned, in terms of crude oil and energy prices in general, and also with respect to climate and environment policies, in which we're already doing a lot on our own steam with our own domestic financial and technological resources. I think we will have higher degrees of freedom. Given the fact that our manufacturing exports to the United States are relatively of a smaller share, I think we should not be overly concerned or exaggerate or amplify the threat factors at this stage, because the positives can also offset some of the potential negatives, and to the extent that some of the global policy discourse or the US administration's policy discourse on import duties prompts us to take a review, because our honorable finance minister in her budget speech in July, in paragraph number 117, did point out that there will be a comprehensive review of the duty structure at the raw material, intermediate goods stages, etc., to ensure our competitiveness, etc. So some of it may also be a blessing in disguise in terms of accelerating the review process that we ourselves have initiated. So I think we should not jump the gun on this matter. Next question, please. Dr. Bashir, I think you're on mute, or?
Mr. Shishir Sinha from Hindu Business Line.
Sir, good evening, sir. Sir, I have two questions, sir. Sir, I have two questions. One, there is a lot of talk about that we are entering into a stagflation zone because of the high inflation which was recorded in the month of October, 6.2%, and now the growth rate is low. And the second question is that do you think that the Q2 number is just a blip and just a one-off, and we will not see the same kind of situation in the coming quarters, sir?
Which one? What's the second question again, please?
The Q2 number of 5.4% is just one-off number, and it's not going to be a kind of a repetition kind of thing.
Your first question is, I can dismiss it relatively easily because stagflation is a wrong phrase to use. There is no growth stagnation. We are growing. We are still growing. The growth rate is 5.4% year on year in Q2, and these are not seasonally adjusted data. These are first estimates, and as I said, our GDP estimates go through 4 to 5 revisions. And stagnation is not growing at all. So it is conceptually wrong to call it stagflation. And when it comes to the inflation part of the word stagflation, 6.2%, and we have said enough times, written enough times in the monthly economic review, is dominated by just about a handful of commodities. Food items of tomato, onion, potatoes, gold, and silver. And we also showed you the inflation expectations of the businesses in the slide deck that I presented a few minutes ago. So therefore, to use the phrase stagflation with respect to India is erroneous, conceptually and practically. Data do not bear that out. I think we should avoid using such wrong phrases to describe the situation, because the public will be misled by economists and journalists using such phrase when it just does not apply to our country at all. Second question, that's exactly what I said. There are enough reasons to believe that this 5.4% is one-off rather than the beginning of a trend. I gave you information on how consumption in rural India is holding up. October sales of select items of manufactured goods in urban India did better, and how the order books of capital goods companies grew more than 20% in FY24, and agriculture and construction sectors doing far better than they were last year. Of course, construction was doing well all the time, agriculture in particular, and therefore there is every reason to believe that we don't expect to see this 5.4% being the beginning of a trend or a pattern. Thank you. Next question, please.
Surbhi Prasad, Business Today.
Ma'am, sir has already answered my question. Thank you.
Okay.
Thank
so
you.
Sapna Das from CNBC.
Hi. I hope I'm audible.
Yeah, you're audible, Sapna.
My query too has been more or less answered. Just one small thing on this, sir. Overall our fisc has been doing very well, but the Q2 numbers slowing down, on expected lines probably. So how do you see the have been doing well, especially direct taxes? Just your view on that.
Sapna, there is a problem. I don't know if you're Sapna, there is a problem with your audio quality. Your voice is going in and out. We couldn't understand the question at all.
Probably if you switch off your video, if you switch off your camera, then your voice will be better. Now, Sapna, you can't. Now you ask the question.
Yeah, okay. Thanks very much. I think more or less my question has been answered, what my colleagues have been asking earlier. But just wanted to get a quick.
Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly...
Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome to NDTV Profit. It's a Friday evening bouncer that's come from the government, the latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter. GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? There are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists, and given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter a year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that. But let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you. Thank you so much for watching NDTV Profit. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
With Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
India's GDP grew at the slowest pace in 7 quarters, led by slower growth across the industrial sector. IT grew by 5.4% in the September quarter compared to 6.7% in the previous quarter. Nifty and the Sensex rally nearly 3% during 2 consecutive weeks of gains. Most sectoral indices rise, with Nifty Pharma gaining the most. CRISIL Ratings reaffirms positive outlook on the Adani Group, cites the strength of the group's financial and business risk profiles. Adani Energy sees largest single-day jump in nearly a year, rising over 19%. UBS Securities warns that loan defaults by microfinance borrowers have risen in October, also expects slippage levels to remain high in FY25. Reports suggest that bank insurance deals are under scrutiny of the insurance regulator. Finance Minister and the IRDAI urge bankers to avoid mis-selling. Serious Fraud Investigation Office seals Hero Electric's premises in Gurugram over FAME 2 violations and unpaid dues to dealers. This is an NDTV Profit exclusive. The Mahayuti's meetings in Mumbai are called off as the deadlock over the Chief Minister's chair continues. Eknath Shinde heads to his village as the Sena says that he's not upset. Russia unleashes a wave of missile and drone attacks across Ukraine, target critical power plants and plunge millions into darkness as temperatures hover around freezing. Good evening and welcome. You are watching Profit 360 and I'm your host Nupur Talwar Suri. Well, we begin with the escalating tensions between Russia and Ukraine. Now, Russia has launched a massive attack on Ukraine's energy system overnight by using 90 missiles and 100 drones. Now, more than 1 million people were left without power just as winter sets in amid temperatures that are dropping. Now, this is Russia's 11th major attack on Ukraine's energy infrastructure. Ukraine claims that North Korea helped Russia with these attacks. In fact, the Russian Defense Minister Andrei Belosko arrived in North Korea today for talks with North Korean leaders. Now, the two countries aim to strengthen their ties over the Ukraine conflict. Ukraine's President Volodymyr Zelensky has criticized the attack, calling it a very mean escalation, especially since cluster bombs, he says, were used against civilians. Let's go across to Tatiana Kukureva. She's a journalist who's joining us from Russia. Hi, Tatiana. Thank you very much for speaking to us on NDTV Profit. To begin with, Tatiana, in the past few days, we have seen a sort of dangerous escalation from both Russia and Ukraine. Ukraine, of course, supported by the West, largely the US and the UK. Now, how do you see this influencing perhaps the outcome of this war, given that we do have Donald Trump, the incoming US president, who has said that he will end the war in 24 hours?
Good evening. Well, look, the problem with Donald Trump saying anything is the fact that he hasn't, he's yet to wait until his inauguration, which is, not even this year. So it's the 20th of January. He will not be able to do anything before that. And the ongoing escalation, let me just come back to your statement. You're saying this is an escalation from both sides. Unfortunately, the side that initiated this escalation is the US, which to this day, still refuses to kind of like formally, completely acknowledge the scale at which it's involved in this escalation and in the conflict itself. But I do believe that we're moving towards, since Ukraine has been given the green light to use those longer range missiles, and it has been very eager to use them. I do believe that right now, we're moving towards Russia responding, obviously, in a proportionate way, which is, it is going to be this way. There's no other way around it.
Right now, Tatiana, we've had the Russian president also come in and say that Russia may now use its new Orshink hypersonic missiles to actually attack decision-making centers. Now, after the attack that we saw on the energy sites, how far do you see this going?
Well, look, let's, first and foremost, let's understand that that has been the strategy so far. This is not the first attack on energy sites, nor will it be the last. This was and has been the tactic and the strategy that Moscow has been pursuing, hitting military target and hitting energy targets. So it would be all of the enterprises that are facilitating warfare and energy centers as well. There's nothing specifically new to this attack. It's just the fact that Ukraine each time cries wolf, basically, as if it's the first time it's happened. This has been happening repeatedly. It's, it goes down to strategy. And second of all, I personally have a very big problem with hearing from the Ukrainian side, that Russia used cluster bombs in any attack, because we've been publishing the aftermath of Ukrainian attacks using cluster munitions on civilian population for months now. There have been multiple occasions where they've used them, but it's not on, military sites. It's not on energy targets. It's on civilian population in the Donetsk and Lugansk regions. And for some reason, these reports fly under the radar completely, and nobody even gives it a moment's notice. But when Ukraine says, look, there's been an escalation, there hasn't been that much of an escalation this time around. We're doing exactly what we've been doing for months.
Right now, Tatiana, you were seeming to suggest that you believe that there must be US boots on the ground as far as their support to Ukraine is concerned. Now, on the other side, we have heard from the US and Ukraine talk about the fact that there are North Korean troops who are actively being used by Russia. In fact, there is a state visit that's currently on. How do you see that?
I can tell you one thing. It's very easy to understand why US personnel would have to be on the ground to launch those ATACMS missiles, because these are high precision missiles, which launching them requires significant training, which it raises doubts whether Ukrainian troops could have gotten this training, especially including the fact that we know that Ukraine's trying, they're considering lowering the age for, for conscription for people to go, because they're lacking people on the ground. Whereas Russia has so far not needed any help. We don't need specifically North Koreans to be making gains. We've been making gains for months. So, without physical proof, and if you look at both sides, neither Russia nor North Korea has even, have even dignified this with it's ridiculous. So far, there's no confirmation. But again, to launch very specific, very high precision technology from Ukrainian soil, it makes sense that it would require US personnel.
All right. Tatiana, thank you very much for joining us on NDTV Profit and sharing your views. All right, going back now to how the markets have performed. Well, it was Friday cheer for the markets. The Nifty and the Sensex ended a percentage point higher and have rallied 3% in 2 consecutive weeks. Most sectoral indices also rose, with the Nifty Pharma gaining the most. Now, Neeraj Shah is joining us with a wrap of all the action that we're seeing on the bourses.
Interesting day of bounce for the markets. Remember, yesterday everybody was grappling with the question about why is it that there was so much of bearishness in the market. You could now blame it squarely on expiry date jitters, and that bounce has been pretty strong in the session today. So 0.9%, and this is despite banks or IT not participating today. So quite stunning, the move that we've seen in the large caps today. The broader markets had a fairly decent outing too, because the market breadth was good. I mean, so 1/3%, and the small caps particularly 0.78%, which brings their weekly performance to about 5.5% in the session. But for today, if you look at the heat map, a smattering of green, very little red, 2 or 3 or 4 noteworthy losers, actually just a couple of them, Shriram Finance and Power Grid. The winners across the board, from Bharti in the telcos to Sun and Cipla in the pharma space to M&M from the auto space to ONGC and Reliance from the oil and gas to Ultratech and Adani Port from infra. So it was across the board. And if you look at the BSE 500 as well, the gainers and losers, yes, the Adani Group features there, as it been the case for the last 3 days. So green and energy making their way into derivative space, some of these stocks, and doing well. But Piramal Pharma, Lloyds Metals, Spark doing well. What didn't do well? Credit Access Grameen on the Goldman downgrade. Poonawalla FinCorp down 5%. There was weakness in Home First, in ITI and Triveni Turbine too. And just a couple of mentions of stocks which entered into the derivative space. So LIC had this big bang move. JP Morgan said that the bank assurance rules actually benefit LIC, and that stock was up about 5%. I wonder what Avenue Supermarts and some of the others have done as well. But largely, it was a positive day for most stocks in trade. So not a bad end to the week. Happy Thanksgiving to everybody.
All right, Neeraj, thank you very much for that. Now, moving on, foreign investors continued their selling for the second session. This is after 3 sessions of buying. Foreign institutional investors sold shares worth 4,384 crore rupees, whereas their domestic counterparts mopped up shares worth 5,723 crore rupees. Well, the Adani stocks have been surging in the past 2 days of trade. More good news overnight for the group. Agam Vakil has the details. Now, Agam, give us more in terms of what you're picking up on this.
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support. Back in May of 2024, the Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile, and they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
Well, the Ministry of External Affairs has come out with a statement on the US case against the Adani Group, saying that this is a legal matter involving private firms and individuals. The US Department of Justice, Rishabh, sent in this report earlier.
India's Ministry of External Affairs has come out with a statement after it was questioned in a routine briefing about the indictment against the Adani Group and several of its directors. The MEA has said that this is a legal matter that involves private firms, the US's Department of Justice, as well as private firms. So it is not party to any of these issues, and it has said that there are established procedures and legal avenues in these cases that, which it believes will be followed. It also said that it has not received any sort of a request from the US on this case in terms of a request by a foreign government for a service of summons or in terms of anything that is related to arrest warrants. It did mention that any request that it receives will be examined on merit, and it also added that the government was not informed on the issue in advance. So the MEA with a statement there on the Adani Group.
Well, India's GDP grew at the slowest pace in 7 quarters, led by slower growth across the industrial sector. It grew by 5.4% in the September quarter compared to 6.7% in the previous quarter. Vishwanatha and Pallavi join in with a breakdown of the key numbers.
The latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter, GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? There are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists, and given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter an year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that, but let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you.
Now, the Impact Foundation conducted its 10th annual donor meeting today at the Tata Memorial Centre. Impact Foundation was established in 2010 with an aim to provide best pediatric cancer healthcare. The foundation also provides education and other help to ailing patients while they are undergoing treatment. Now, every year, nearly 4,000 children are treated across the country. Till date, over 20,000 children have been completely cured by the foundation. Considering that the patient needs to live in the city for at least 67 months for blood transfusions and other related treatments, nearly 25% of the children abandon treatment midway. This rate has been brought down to 5% by the Impact Foundation. Now, the cure rate of the TMC and the Impact Foundation together is around 80%. The leadership of TMC and Impact Foundation have requested for people's support towards the great and humble work that the doctors and other support staff of TMC and Impact Foundation are doing towards curing children suffering from cancer. Well, the government has taken several steps to address growing concern over children getting addicted to online games. Now, one of the key measures is ensuring that no gaming advertisement features individuals under the age of 18. Rishabh is joining us with more details on this. Hi, Rishabh. So the government looking to take substantive steps over this?
right? The government has reiterated all the concerns that it has towards children getting addicted to online games. Now, this was a written reply by Junior Minister Jitin Prasad, who is the Junior Minister for Electronics and IT. He mentioned that there's about 4 steps that the government has taken to ensure that children don't get addicted to online games. Firstly, it was that no gaming advertisement should actually depict people or kids under the age of 18 being involved in them. Secondly, all gaming ads should carry a disclaimer that says that the game involves an element of financial risk and may be addictive. Thirdly, he wrote that the government has moved towards presenting that these games should not be presented as an alternate income or an alternate career. And fourthly, the person that is depicting doing gaming should not in any way being depicted as someone who's more successful than others. So these are some steps that the government has taken to address these concerns.
Right, Trisha, bringing us all those details on that. Thank you. Well, in fact, that's all we have time for right now on Profit 360. Thank you for joining us, but do stay with us for more.
It's an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy.
Hello and welcome. You're watching the Small and Mid Cap Show. Well, in this show, we take you through some conversations with the outlook of companies and, well, conversations around what we can expect from the managements of these companies. First up, we are in conversation with the Chief Financial Officer of Gulf Oil Lubricants, Manish Gangwal. Manish, thank you so much for joining in. Well, I want to start by asking about the company making significant acquisitions in the EV-related businesses, and I want your view and your way forward as to how things could potentially pan out for the business is in this area specifically.
Yeah, good morning. Thanks for having me on your show. Basically, as a lubricant company, we are primarily a lubricant company, and we have been, servicing our entire range of automotive and industrial lubricants for last many decades in India. But as EVs started becoming sort of talk of the town, and more people will be looking at EV as an option going forward. While we believe that lubricants market is going to continue to grow in India for many decades still, but we as a company, wanted to look into the EV value chain and where we can play as our role in the EV value chain. And what we figured out was that we have a very strong brand which is known to the automotive consumers. Today they may be an ICE vehicle consumer, tomorrow they may be an EV consumers or EV buyers. How to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network. With that thought process, we started looking at the sector, and what we came through was that manufacturing of chargers is a good opportunity. And as the EVs grow, there will be a requirement of more and more chargers for EVs. And that's where we started acquiring companies. We acquired a company called Indra Technology in UK, and their expertise is slow chargers, slow AC home chargers for cars. And then we acquired another company in called Tyrex Transmission, based out of Ahmedabad. They are having DC fast charger products. So we have now complete end-to-end charger solutions for any of our consumers, buyers, customers, OEMs. So right from AC chargers to fast DC chargers, we have a complete range.
Right. Manish, at least as far as Tyrex is concerned, we understand that you had strong revenue growth in the second quarter. Even your other acquisition, taken together, can you give us an idea about kind of contribution that these companies can bring forward to your consolidated numbers, if not for the next 6 months, for perhaps the next 18 months?
See, our objective in Tyrex, particularly where we have 51% stake and they are fast growing. When we acquired this company in October 23, their last reported FY23 turnover was 12 crore rupees. So on a very small base, then we doubled it in FY24 to nearly 25 crore rupees. And as you rightly mentioned, in H1 itself, Tyrex has delivered 25 crore so growing at nearly 300% over H1 last year. So this company, overall, the demand is very good, and we believe that the company can at least double the turnover every year for the next 3, 4, 5 years, and should be easily doable, which means that we are aiming at roughly 500 crore rupees at least turnover in next 3 to 4 years from this acquisition.
And when it comes to profitability for both these companies, Manish, what's the way forward? When can we expect them to be in the black?
So currently, they are EBITDA neutral at this stage. What we are also doing is that the company is investing into R&D. Company is investing into a lot of service network required for servicing those chargers and installations and all those capacities. Plus, strengthening the manpower. We are expanding the capacity of the plant now. So there is a lot of investment which will be there in these building the company into a very, very formidable company, a very strong player in the market. But we believe that once we reach a size and turnover scale, the company should be able to deliver at least 12 to 15% EBITDA margins, which is what the lubricant business is doing. So it will not be a margin dilutive business on the consolidated basis for the company.
Right. Well, moving on, let's talk about your core business. And at the moment, what can you tell us about growth expectations going forward? Keeping in mind how your first half of this financial year has been for you, what can we expect in the second half?
So we had a very good first half, I can say. Growing our revenues nearly around 8%, growing our EBITDA by 15% and PAT by 20% plus. So we had a very good H1. Typically, the lubricant season starts from October onwards. So H2 is usually better than H1, as that's the past trend suggests. So we are hoping for a good H2. Also, I would like to add that some of our segments like factory fill business, where commercial vehicle is our primary segment for factory fill, they have not been doing lifting that much from OEM perspective. As we know, commercial vehicle production has slightly gone down. So if we foresee that commercial vehicle will also be now lifting more and H2 will be better for them, that should also add up. So overall, we are looking for a good H2 and while delivering an excellent H1, I would say.
All right. What I also want to talk about specifically about AdBlue, and in this case, if you can give us an idea about the kind of traction that you're witnessing here, the kind of market share that this particular product has right now, and what can you tell us about the outlook here?
So AdBlue as a category, as you know, is mandatory now for all BS6 vehicles, diesel vehicles, and it's been rapidly expanding in terms of requirement. We have nearly made our volumes 6 times in last 2 years. So our FY22 volume was around 16,000 KL, and then we did 78,000 KL in FY23 and nearly 1,28,000 KL in FY24. So we have nearly grown more than 6 times in last 2 years. So that is a massive, I would say, expansion. But and obviously, as you mentioned, we have close to 25% market share here. But we believe that this category will continue to grow now. Double-digit 15-20% growth annually is what we are expecting in this category. This is a relatively, high volume, low margin business, but in the end, it is need of the consumer, need of the customer, which is already buying our lubricant. So, and synergistic to our distribution, and that's why we have gone ahead with the approach of delivering a value product and a very good quality product to our customers. We are quite hopeful that AdBlue will continue to grow at least 15% for the many years from now on.
Right, Manish, a question also on your overall operating margins. Now, we've seen some amount of volatility in your key inputs, and the question really is that, firstly, How much of that volatility in the key inputs comes in the ongoing quarter, or is there a delay? And based on that, what is your overall projection on your consolidated operating margins for this financial year?
So we have been guiding a band of 12 to 14% EBITDA margin, and we are quite hopeful that we have delivered it in H1. We are quite hopeful it will be, even slightly even better than H1 in H2. Also, we have seen that crude has sort of stabilized around $72, $73, below $75. And if that remains, typically the lag effect of that is on the base oil with 1 to 2 months of time lag. And we believe so far we have not seen any major impact on base oil, but we are quite hopeful by Q4. If there is some improvement in base oil pricing and the market price competition scenario remains stable, we should see positivity in the margin. But we are sticking to our guidance of 12 to 14% margin band for H2 as well, while investing more in our A&P. As you must have seen, we have a mega campaign going on right now, which started in September, the Unstoppables, where all our 3 brand ambassadors, MS Dhoni, Hardik Pandya, and Smriti Mandhana, have come together for the first time. So it's a mega campaign, on ground, off ground, in movies. There is a lot of activity going on, so we are spending slightly more on A&P as well.
All right, and a final question then, Manish. Going forward, at least as far as your second half of this financial year is concerned, are you going to look to consolidate on your current product line, or are there going to be newer introductions here as well in store?
We keep introducing new products. Right now, as a part of our Unlock 2.0 theme, which we unveiled sometimes in June, we are focusing internally on premiumization, which means the high margin products, synthetic products. More and more of those will be a part of our portfolio and sales efforts, and that's where we see new products being launched quite regularly in requirement with the market needs.
All right, Manish, we leave it at that. Thank you so much for joining us and taking us through your views on, well, the company, of course, as well as the outlook going forward. We wish you the best. That's the management of Gulf Oil telling us about what's in store, the plans on the anvil, and also, of course, we've discussed plenty in terms of this performance. The stock itself has as well as done reasonably well, because it's up as much as 58%, as you can see on your screen there, in the last 12 months. So certainly an outperformance, if I can call it that, even with respect to your key indices coming through. But with that, we shift focus to yet another company which has in fact also outperformed the key benchmarks, and that is NCC. This one has gone up by as much as 85% in the last 12 months. So certainly substantial gains coming in. A bulk of those gains, however, coming in the first half of these 12 months. And well, it maintains itself, notwithstanding the overall market volatility. Well, to take us through the outlook for this particular company, we are now in conversation with Neeraj Sharma. He is the head of strategy at NCC. Neeraj, good afternoon, and thanks for joining in. Neeraj, I actually wanted to take stock of the second quarter right at the top of our conversation here. You suggested a guidance of around 15% growth. Post elections. Have things changed for you, and do you think that this potentially could require some change here in terms of your top line expectation growth?
Very good morning, Agam. If you really look at the performance of our company in the H1, there is a revenue increase of about 13%, and flattish kind of parameters as far as the profitability of the company goes. That said, as you rightly said, we have guided for a revenue growth upwards of 15%, and as we speak, we continue to stick with the same number. If you really look at the performance, I'm just trying to extrapolate that a bit. If you really see the performance of the company in the last couple of years, the H2 traditionally has been better than H1. If we really try to sum that up in terms of a number, you will get to see about 20 to 25% growth generally in the H2. So as we speak, we continue to stick with the same guidance that we have shared with the street, and hopefully hit those numbers.
Moving on, I also want an idea on the execution that you have in store for the second half. If I'm not mistaken, and please correct me if I'm wrong, your current order book stands at a little over 52,000 crores. How much of that is going to be, or rather be expected to be executed in the next 6 months? And, if you could just give us an idea about on the further timelines on execution here.
Out of this, you are absolutely right. The order book that we have had, at the end of September was 52,370 crore. If we really talk about the next 6 months, about 12,000 crore, from this bucket should get executed in H2.
All right. And can you also tell us a little bit more about your latest order? This is the 3,400 crore order for Dhaudan Dam under Ken Betwa Link project. The timelines under which this project is going to be executed, and if you could give us more details here as well.
Sure. Firstly, this is one of the first project that has been awarded for what we have been talking about for about a decade or so, that is interlinking of the rivers. What this scheme intends to really do is to, connect the water surplus areas with the water, in the areas where the water is a scarce commodity. So this project is a project that is expected to be executed in about 6 years' time. What the project intends to do is to really, draw the water from a water surplus area called, Ken Betwa, and bring that water to a, to what we call Bundelkhand region of UP, close to Jhansi. So that is an area in which the water continues to be a very, very scarce commodity, So this scheme intends to bring water to that part of UP. So this, and as I have shared with you, this project is required to be executed in about 6 years' time.
Okay. Well, also moving on in terms of the order flow, and from what I understand, the awarding activity increases in the second half, specifically in the fourth quarter of the financial year, usually. Is that the case, and is that how you're expecting the things play out as well? And based on that, what is your expectation of order inflow in the next 6 months?
Yes, you're absolutely right. Generally, the award picks up in Q4 and Q3. That said, I also take this opportunity to share with you the fact that you are already aware, that in the first quarter of this financial year, we have had, central government elections. So generally, the award, the pace of award has been, bit slow but things are picking up. To answer your question specifically, as we speak till today, we have bagged total orders worth 11,645 crore. I repeat, 11,645 crore, which is about 58% of the lower band. We have already shared one order inflow guidance with the street, which is 20,000 to 22,000 crore. If we really take into account all the awards that we have, all the projects that we have bagged till today, we have already achieved about 58% of our target. And we are quite hopeful to achieve the order inflow guidance that we have shared with the street.
All right. Also a question on your debt, and from what I understand, your net debt stands at around a little over 1,600 crores. I believe that you want to bring this down further to around the 500 mark. What are the timelines that you're working with here?
Maybe next 2 quarters, we should be able to bring this down close to 500 crore net number.
And also, when it comes to private sector contracts, can you tell us about what kind of exploration you're trying to figure out here? If you have, in fact, made any headway when it comes to private sector contracts, what's the way forward here?
See, primarily the infrastructure sector is a sector that is that continues to be dominated by the central government, their agency, the state government, and various arms of the state government. But we have been able to bag some private sector contracts as well. It would be close to 5-6% of the total order book that we have with us.
Okay, and also want to know a little bit more about the water division. Now, we've had several companies, in fact, talk about the focus on Jal Jeevan Mission. In fact, we've had more and more companies being listed from the same space. You, from what I understand, at least about 12 to 15% of your order book is based on this particular aspect, that is the water division. Just want to understand better if your mix could potentially change because of that. What kind of growth are you seeing in this particular category and the kind of traction that you're seeing in this sector?
As you rightly highlighted, we have about 12% of order book from this division, what we call, the water division. Other than Jal Jeevan Mission also, Jal Jeevan Mission is a flagship scheme of the government of India, and we understand, a lot of households have already been provided potable water connection, but about I think 4 to 5 crore households still needs to get potable water connection. That said, other than Jal Jeevan Mission, also in the water space, we are of the view that we will get to see a lot of water supply projects, waste treatment plant, sewage treatment plant. So this is a space that is very interesting to us.
All right, Neeraj, we'll leave it at that. Thank you so much for joining us and taking us through the company's outlook as well as the business going forward. Thank you. And with that, it's a wrap on this edition of the Small and Mid Cap Show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
For everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable
and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.